tech is still where it's at, and I know that right here is the best place to do that.
We think there are some very macro, strong tailwinds ahead of us.
Corporate America is healthy, and it's called a business cycle for a reason.
There's just been some uncertainty in the market. You can't argue that.
It's probably a bumpy road ahead. It will come with some volatility.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. Coming into Thursday, it's risk on. A U.S. court upending President Trump's Liberation Day tariffs. A blow for the White House, which plans to appeal immediately, throwing negotiations with major trade partners into total disarray. If markets digest what is and isn't covered by the ruling.
So let's go over what we do know. The ruling covers the 10% baseline tariffs, the 25% tariffs on Canada and Mexico products, as well as the extra 20% on China and reciprocal tariffs. Okay, that's a lot. It isn't necessarily covering auto tariffs, also aluminum and steel, as well as the other potential, a couple on the margin, some of the other tariffs. Question here is, why is the market rallying at all on this? Because there does seem to be a check on just how far the president can go. Why is the market rallying more? Well, it still shows that the president has abilities to put tariffs on in different ways.
Here's the take on Wall Street so far this morning. Jordan Rochester of Mizuho. It's a small deviation along the same path, same end goal. This from Goldman Sachs. For now, we expect the Trump administration will find other ways to impose tariffs. That seems to be the takeaway so far this morning.
Absolutely. This is a detour to the journey, but the end destination is clear. The president will get the tariffs he deems necessary, especially part of this negotiating process with other countries. And the court ruling, page 34, even gives a nod to another law that the president should have used, Section 122, which is one of these tools that potentially they're going to use in the short term before they do a 301 investigation. The president has a menu ahead of him. He just needs to decide what path he's going to take.
There's a lot of items still on that menu. The president hasn't responded to this yet. I imagine we'll hear from him a little bit later on this morning. We'll also be catching up on this program at 8:45 Eastern Time with Peter Navarro. And I imagine Mr. Navarro's got some thoughts on the matter as well.
Yeah, the White House's official comment has been, we do plan to appeal this. It could go to the Supreme Court. It probably will take longer than the 10 days that the administration has to comply with this ruling. I do wonder going forward, though, what this does in terms of taking off some of the tail risk, of limiting what kind of powers the president could invoke in order to go full throttle ahead with some of this. The 3-judge panel, just want to point this out. It was an of-the-court decision. They didn't give a breakdown of the votes, but there was one judge who was nominated by Reagan, one by Obama, and one formerly by Trump, who was recommended by Robert Lighthizer. So this isn't exactly a group of super liberal rogue judges, and it is harder to dismiss.
They have the issue with the using of IEEPA, and basically what they're saying is this is unbound in the tariff authority, and they think this has gone beyond the tariff authority. What I will say is there is one big question, though, if you are a retailer this morning. The court ruling said vacate, which basically suggests some of these companies that paid the tariffs will actually get refunds. But immediately in the White House appeal, they asked for a stay of the decision. Basically, they want to keep the tariffs in play while this goes through the court, while the appeal is basically saying, actually, the tariffs should come off. So in the next 10 days or so, this is going to be really critical if you're one of these companies that is paying tariffs, this import tax, at the border.
The market response pretty clear at the moment, at least. We're positive by 1.3% on the S&P 500. Coming up this hour, we'll catch up with Marvin Lowe of State Street as reciprocal tariffs hang in the balance. Angelo Zino of CFRA with NVIDIA earnings reigniting AI optimism. And we'll speak to Bob Michael. Counting down to jobless claims in just a few hours' time. We begin this hour with our top story. The president, tariff strategy stuck in legal limbo. Joining us now is Bloomberg's Tyler Kendall in Washington, D.C. Tyler, what's the latest?
Yeah, hey, John. So this 3-judge panel found that the Trump administration essentially wrongly invoked IEEPA, the International Emergency Economic Powers Act, to impose their so-called reciprocal tariff plan. The administration had argued that persistent trade imbalances amounted to a national emergency, but the court said that that didn't meet the bar or the standard for what they call an unusual and extraordinary threat under the law. Importantly, this extends to other instances where the administration has invoked IEEPA, including when it comes to Mexico and Canada, as well as China, on the basis of concerns about the U.S. border and fentanyl. Now, it does not extend to those tariffs that have been implemented under Section 232, those sector-specific tariffs like steel and aluminum, as well as autos. And importantly, this is really the first time that a president had used IEEPA to invoke tariffs in this way. And the court said that it would have been unconstitutional for Congress to essentially give what they called unbounded tariff power to the president to do such sweeping levies. Now, John, at the end of the day, it is unclear how quickly this will go into effect. The court has given the administration 10 days to essentially work out the administrative moves to ultimately pull back those tariffs. But the White House says that they are going to appeal this immediately, and there's a chance it could end up in front of the Supreme Court.
Well, Tyler, in the actual appeal and the actual court document, they basically argue that they should have just used a different legal pathway to do these tariffs. What kind of options does the White House have right now?
Right, definitely, Annmarie. So there's a few on the table. One, of course, is Section 232. We're still expecting the administration to invoke tariffs when it comes to chips and also pharmaceuticals under these powers, essentially for the administration to declare a national security crisis. The other one is Section 301. This would allow the administration to look into some investigation when it comes to unfair trade practices. But, of course, there would likely be a delay there as they have to put into effect those inquiries. And then you mentioned another one at the top of the show, which is Section 122, which could allow the president to put tariffs into effect up to 15% for 150 days, but he would need to declare a balance of payments crisis. And with the recent moves in the bond market, it's unclear if that's something this White House would be willing to do.
Tyler Kendall with the latest. More from Tyler later on in the programme. Tyler, thank you. Here's the view on Wall Street this morning. Marvin Lowe of State Street writing the following: while trade comments are still volatile, it's easier to make a bet that they will settle well below the worst case. Marvin joins us in the studio. Marvin, good morning.
Good morning.
Let's take a beat. To what extent does this compromise the president's end goals? And does this lead, in your mind, to a step up in macro expectations?
You know what? I think that the uncertainty that we're all faced as investors, as well as the uncertainty that really corporate America is dealing with, hasn't really changed. We know the administration is going to push back. They're going to push back hard, and we're still not going to have a lot of clarity on whether it's a universal, whether there's step-ups, whether VAT is included, and that will impact corporate spending, in my mind. At the same time, if we somehow can push away tariffs in the short term, we know that retailers have a tendency to really front load if they can. We saw that in the first quarter. Does this impact a really fragile consumer view, at least going through the summer? It makes data much more volatile. It already has been volatile, but kind of that really negative consumer sentiment that's out there is driven by inflation. And if the impulse isn't as great as kind of all of the hyperbole for the last 6 weeks, we could build upon a more resilient consumer.
We ask this question: what has actually been established by this court ruling, given the fact that the president still has the ability to put on tariffs in other types of measures? Is there some level of tail risk that has been taken off the table as a result of an institution pushing back in such a concrete way?
Yeah, I mean, I think if we kind of look at the cadence of that first week of April, certainly the market was shocked on Liberation Day. It was more shocked on Friday. It was even more shocked the following weekend. It was really the punitive tariffs that really seem unhinged to a certain degree. That scared everyone. It was like, how, to what end can this get to? This, to me, if anything, pulls a little bit of that unsteadiness out of the market.
You talked about companies possibly retrenching some of their spending planning, and yet what we're seeing from a lot of the earnings reports so far are much better than feared in terms of both their deliveries. Only 3% actually withdrew earnings guidance going forward. There's this feeling that corporate America has managed to be resilient even in the face of this uncertainty. How much is that your takeaway?
Yeah, I mean, I think Tom King says it all the time. Companies figure it out. That's why we ultimately invest in these companies. We expect management to figure these things out. At the same time, I would point out that earnings estimates came down by about 50% kind of during that period since Liberation Day. Second quarter earnings are now somewhere in the 3.5% range for the S&P. They were 7% before April. So Wall Street has been required to make changes. They didn't know what to make, but it certainly wasn't going to be up afterwards. Does that wind up creating an environment where the second quarter can more easily beat? It doesn't really answer the kind of longer questions, more intermediate term questions, but for the short term, you've got news that is attractive for expectations as they were in the worst of the worst.
Given the fact, though, that this court has pushed back on Trump using IEEPA, do you think he'll come back with even higher tariff levels, almost a little bit more of like vengeance?
You know what? I am not going to be in the business of guessing what this administration will push back on. They will push back, most certainly. And, the president himself has said he uses these large numbers as a negotiating tool. If he's lost some negotiating power as a result of this, if there are other avenues available for him, I would expect him to use those.
If he lost negotiating power, how do you think about the current negotiations right now? How much leverage do these foreign governments have?
I think the fact that it's taking so long, and again, trade negotiations generally take years, so we're trying to compress it down into months. So, the inability to do it is not necessarily surprising. But certainly what we've heard from the UK is not really a trade deal. And some of the easier Asia countries, if you will, based on their trade balances, have not really put anything on the table either. So, they are pushing back.
Marvin, before you go, Nvidia in the pre-market. Let's get to that too. It's a factor behind the rally we're seeing this morning. A big factor. The stock is up by more than 6% in the pre-market. Do you see the path of least resistance for this market still being higher?
Yeah. If going into the summer, yes. Data, the administration, trade is so volatile. But at this point, I think that we've really seen the worst case. A lot of estimates are based on those worst cases, and we're going to walk it back.
Morgan Stanley have pointed out we've gone from abysmal to not so bad. I'm paraphrasing here, but ultimately, does positioning speak to that? Do we still have positioning offside to the extent that we can actually rally from here through the summer?
That really is a large part of my thought process. We get to see positioning data kind of based on the platform that I work on, and positioning is much cleaner at this point. So yes, you're able to build because the big move over the last couple of months was to get to neutral, to find some safer water, to figure out which way you want to go.
Marvin Lowe of State Street. Marvin, appreciate your time, sir. A lot to get through. Nvidia this morning higher by more than 6%. We'll bring you some of our conversation with Jensen Huang a little bit later. Equity futures on the S&P 500 doing nicely as well. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Danny Berger. Hey, Danny.
Hey, John. As you've been discussing, a U.S. court has blocked many of President Trump's tariffs on imports from dozens of countries, declaring them illegal. The court said that the administration had wrongly invoked a 1977 law in imposing his Liberation Day levies. It now sets a 10-day deadline for them to be stopped. The White House said it will appeal the ruling. Now let's get a check on those Nvidia shares. As you mentioned, higher by 6.5%, a beat on first quarter results. Nvidia also said it expects revenue of about $45 billion in the second fiscal quarter. That despite new export restrictions costing about $8 billion in Chinese revenue. The U.S. will start revoking visas for Chinese students with connections to the Chinese Communist Party or studying in critical fields. That escalates Washington's push for greater scrutiny of foreign students at American universities. The Trump administration will also revise the visa criteria for all applicants from China and Hong Kong. And that's your brief. John.
Hey, Danny, thank you. Appreciate the update. More from Danny later this hour. Up next on the program, Trump's tariffs in legal limbo.
Wall Street analysts have coined a new term called the taco trade. They're saying Trump always chickens out on your tariff threat.
And if I set a number at a ridiculous high number and I go down a little bit, I chicken out. I've never heard that.
The latest on trade coming up next. We'll catch up with the former senior Trump trade advisor, Kellyanne Shaw. Live from New York City this morning. Good morning. Equities doing nicely this morning, up by 1.2% on the S&P 500, a mix of a setback for the president's trade strategy and also Nvidia earnings after the close yesterday doing nicely too. The Nasdaq 100 up by 1.7%. Lots of commentary from those of you on Wall Street, including Max Kettner of HSBC, with this to say: this ruling calls into question any hard data weakness that we may see in the coming weeks, which might easily be dismissed as being pre-deadline and pre-ruling, and therefore as stale, old data. The path is cleared for further risk asset gains in our view. And we see that so far this morning. Under surveillance this morning, Trump's tariffs in legal limbo.
Wall Street analysts have coined a new term called the taco trade. They're saying Trump always chickens out on your tariff threat.
And if I set a number at a ridiculous high number and I go down a little bit, I chicken out. I've never heard that. You mean because I reduced China from 145% that I set down to 100 and then down to another number, and because I gave the European Union a 50% tax, you call that chickening out?
Here's the latest this morning. A U.S. court declaring the Trump administration wrongly invoked a 1977 law in imposing his Liberation Day tariffs. The White House saying it will appeal. Joining us now is the former senior Trump trade advisor, Kellyanne Shaw. Kellyanne, welcome back to the programme. Neil Dutter of Renmac writing this morning. Tariffs are a dial, not an on and off switch. And if you think the judiciary gets to be the one to turn the knob, seek help. So, Kellyanne, it raises the question. What does this mean for the president's strategy?
Yeah, good morning. It was certainly a big night last night in Washington, or a big morning this morning if you're waking up to the news that the CIT did declare that those executive orders for imposing the reciprocal tariffs as well as those fentanyl tariffs are invalid. Now, I do have to agree with that comment. This was not the president's only avenue for imposing tariffs. And the story here is not done. There's going to be an appeal. The U.S. government has already appealed this decision. But the president has a menu of options to choose from when it comes to tariffs. And in the decision itself, the court actually pointed to one of them, which is Section 122. And in finding that IEEPA did not justify the use of these reciprocal tariffs, the court said the president should have used 122 if he wanted to impose these tariffs. So that's certainly an option for the administration as well.
When it comes to 122, I was also struck by that. The court in the ruling is basically telling the administration this is a different avenue. Legally, you will have more success. But 122 can only last for 150 days. What would happen next?
Yeah, and this was a debate among trade experts before the president announced his plans on Liberation Day about what authority should he use in order to justify some of these tariffs. Now, 122 is interesting because it does get to this balance of payments issue, the fact that other countries are exporting more than the U.S. is importing, and some of these economic factors. But as you said, it is time limited to 5 months. It's also time or value limited to 15%. So that may be one reason why the administration didn't use it in the first place. But you could impose theoretically a 15% tariff across the board on all countries for 5 months, while at the same time initiating something like a Section 301 investigation or Section 232 investigation. He also has Section 338, which he could use to potentially justify tariffs. And again, the story's not over on IEEPA. This is going to be challenged in the courts, and we'll see what the Federal Circuit says about this and whether or not they agree with the CIT.
Well, the immediate appeal from the White House asks for a stay on the decision. When will the tariffs actually be lifted?
Right. So the way that this order is drafted gives the administration 10 days in order to implement this restraining order on the tariff collection. Now, what the administration has done is they've appealed it to the Federal Circuit. They have also filed a motion for stay with the CIT, and in both instances have said there's going to be irreparable harm to the United States, to its foreign policy and national security interests, if you don't stay this judgment while this case is being appealed, meaning if you don't allow us to continue to collect tariffs. So we will find out from both the CIT as well as the Federal Circuit in the next days or weeks as to how they feel about that motion and whether or not they're going to grant the administration's request. And that will determine whether or not these tariffs will continue to be collected or not after that 10-day mark. So we don't know yet. We're waiting for the courts to tell us.
Kellyanne, being a negotiator during Phase 1 trade deal with China in Trump's first administration, what does this do for the negotiators right now that are dealing with a host of countries that are trying to get to a deal with the United States?
Right. Well, I do think it definitely throws sand in the gear in terms of how those negotiations are happening. And this was the calculus that a number of countries were making, that either by the end of July, the president was going to run out of political capital in order to sustain his tariff strategy, or there was going to be action in the courts. But, I think it would be a little bit foolish for countries to just assume that this is over for the president. Again, this is getting appealed to the federal circuit, which previously had justified the use of tariffs under IEEPA back in 1974 in this Yoshida case. And the administration thinks it has good footing in terms of its legal arguments for using IEEPA. And of course, the courts will tell us whether or not they agree with that. But because there are other legal options, not just IEEPA for the president, I think you can safely assume that the president isn't going to give up on the use of tariffs and these tariff threats with other governments. So I think the negotiations continue. I just think there's a bit of an asterisk there for countries who may be waiting a bit to see how the court comes out on this.
The process is going to take a lot longer than some of the deadlines initially suggested. Kellyanne, if you were advising a company on how to arrange their business, how to invest, how to plan in the next 6 and 12 months based on some of these timelines and these ongoing negotiations, what would you tell them?
Yeah, I don't think that much has changed in terms of how companies should be looking at the tariff landscape. Because again, even if these court cases continue to proceed in a way that does not support the administration's objectives, there are other options for the administration, and I don't see them backing down. So from that perspective, I do think that companies should still plan for a high degree of uncertainty and should see whether or not some of these negotiations with major trading partners land in a way that would take down that tariff temperature and help give a little more stability and certainty in terms of some of these investment decisions. So while this is huge news, I don't think that it changes the chessboard that much in terms of how companies should be looking at the next 6 months.
There's a bill right now in Congress that could potentially, if passed, give President Trump a lot more leeway to take the lead with respect to forming tariffs and not having any kind of legal challenge. How much comfort, I don't know, however you'd want to phrase this, should corporate executives have that it hasn't passed, and that frankly there's been a lot of pushback among Congress members, Republican Congress members, who are feeling the pushback from these tariffs in their regions?
Yeah, and the dynamic with Congress has been really interesting. And right after Liberation Day, there was that resolution of disapproval where a few Republican senators actually voted with Democrats to oppose some of the tariffs on Canada and Mexico. And so there is a little consternation on the Senate side, but I don't see that same dynamic on the House side where Republicans are also in the majority. I think that trade bills are just hard in general, whether they're pro-tariff or anti-tariff, they're just really hard to get across the finish line, which is why the executive has been so powerful in terms of taking some of these actions over the past several decades when it comes to tariffs. They've really been in the driver's seat. So I don't really see that dynamic changing just yet. I'm not sure support for this bill or lack of it really indicates whether or not Congress is going to get involved. I think right now they're also in this wait and see position, but this is a very dynamic environment and we'll have to see how all of this unfolds.
Kellyanne, thanks for jumping on for us this morning to explain a lot of this. The former senior Trump trade advisor, Kellyanne Shaw. Anastasia Amoroso of iCapital will join us a little bit later, calling this a setback, a roadblock, but one ultimately that can be overcome.
Yeah, and that's what Kellyanne said. This is sand in the gear. So maybe it slows down some of those negotiations and slows down how quickly the administration wanted to use their tariff authorities. But they're just going to find other measures. And what I find so fascinating and obvious in this court ruling is the court ruling basically tells the administration what next lever they could pull. Section 122, that's the direction of travel, at least for 150 days to potentially open up investigations with 301. So Jordan Rochester put it great. Small deviation along the same path, same end goal. Tariffs are coming.
Which is why you see equities fading just a touch. Still positive, though, Lisa. We're positive by 1.1%.
Yeah, and how much has to do with NVIDIA? The idea that companies adapt and adjust, and that even though the tariff threat still is outstanding, there is a feeling that companies are moving forward. It also makes me wonder how much companies are going to double down on just wait this out. See how long this takes, see how long they can push out some of these potential tariffs and keep their plans that they've had in place for a long time.
Not just companies, but countries too.
Exactly.
This really complicates negotiations potentially in the coming weeks as we approach that July 9th deadline. Equity futures on the S&P 500 up here by close to 1.2%. Up next, we'll catch up with Angelo Zino of CFRA with NVIDIA earnings reigniting a lot of AI optimism. Live from New York City this morning. Good morning. You're watching Bloomberg TV. Your gains brought to you by Nvidia and 3 judges at a US court. Equity futures on the S&P positive by 1.1%. On Nvidia, that stock is flying. The Nasdaq 100's higher by 1.6%. With that stock move and more, let's cross over to Danny Berger. Hey, Danny.
John, you read my mind. Let me show you exactly what Nvidia is doing. It is higher by 6% in the pre-market trade. They reported earnings, not the crazy beat and raise we're used to, frankly, over HSBC called it good enough. I don't know, this reaction is a little bit more than good enough. $45 billion is the expected revenue for the fiscal second quarter, despite that $8 billion expected hit from China. So if those tech earnings were good, HP earnings were very bad. The computer maker cutting their profit outlook for the year. Those shares down nearly 8.5%. The issue is twofold. For one, they talked about their supply chain. They want to try to start rerouting things away from China into a lot of emerging markets like Vietnam and Mexico. And they talked about that demand for computers might be lower because of tariff uncertainty. But if you were a company, do you wish you could go back in time and kind of adjust things given the court ruling? That's at least what some investors are expecting for companies like Best Buy. It is one of the best performing S&P 500 stocks so far this morning, and they are going to be reporting earnings this morning. We haven't even heard from them yet, and those shares are up just under 5%. The focus for them had been tariffs. What do margins look like? Do they need to raise costs to consumers? Are we going to get an even wider range of scenario analysis? Either way, really interesting ahead of those earnings, that there already is a lot of optimism injected into the shares, John.
Hey, Danny, thank you. More from Danny later this hour. On our radar this morning, our top story, a US court upending President Trump's Liberation Day tariffs. The ruling could eliminate new tariffs on imports from China, Canada, Mexico, and other countries. The White House saying it will appeal.
It could eliminate. We don't think it's going to. The president has a number of tools and options that he can use. Even the court in its ruling basically tells the president, you could have done this legally under a different law, Section 122. So basically, it's a wait-and-see game, and there's going to be a lot of questions waking up this morning on when the tariffs could potentially be lifted, and then the president could use another law, or given the fact that the White House is asking for a stay. So basically, these tariffs could stay in place until it likely reaches the Supreme Court. These are the kind of questions the market's going to have to be dealing with, but the direction of travel is very clear. The president wants to use tariffs, and he will get his tariffs.
At the same time, when you take a look at the language of this ruling, it isn't exactly comforting to the president. It talks about how it would be unconstitutional for Congress to delegate, quote, unbounded tariff power to the president, to the executive branch, saying an unlimited delegation of tariff authority would constitute an improper abdication of legislative power to another branch of government. So it did go further than just talking specifically about, hey, maybe use this provision and try this and you can do this. It did say there are constraints on what a president can single-handedly do when it comes to rearranging trade.
It certainly has the potential to slow them down, which speaks to the market move we saw overnight. Check out this move too. Nvidia higher in the pre-market by more than 6%. The chip giant delivering solid sales guidance and saying there is still, quote, exponential growth in the AI computing market.
The fact that they took an $8 billion hit to sales because of some of the restrictions in China and still maintained their guidance speaks to the strength that you're seeing for this particular company. A real question here, the existential question really is, as we were talking about yesterday, China and how much they can remain in that market. And that remains a question on both sides, both with U.S. restrictions and with Chinese restrictions on where they can go. And it raises a question, and it's really a deeper question, and we'll get into it, I'm sure, later, which is how closely intertwined do you want to be at a time where technology is evolving very quickly there as well as it is here?
I found the timing of all of this last night so interesting. As Jensen Huang was talking to Ed Ludlow, that is when we had the court decision come out. And Jensen Huang called Donald Trump's tariff plan to reindustrialize, bring onshore manufacturing back to the United States, utterly visionary. At the same time, the courts are saying, actually, you need to tweak this because we think it's illegal.
He's playing both sides quite well at the moment, isn't he?
Yep, absolutely. I mean, he gave basically 2-3 minutes to everything he likes what this administration is doing, even though, to Lisa's point, they had this huge write-down because of the market share they're losing of those H20 chips in China.
Stock is higher in the pre-market by more than 6%. We'll come back to that in just a moment. Elsewhere, the White House cracking down on the sale of chip design software to China. Sources telling us here at Bloomberg, the Commerce Department sent letters to some of the leading software designers last week, telling them to halt shipments to Chinese customers.
This goes to this question of how do you prevent the AI establishment, development, in China at a time when a lot of people are worried about copycat technologies and just who's going to win this race, because ultimately it is a race. And it's kind of what I was getting at with Jensen Huang and what he was talking about. In his conversation with Ed Ludlow, he said with half of the world's AI researchers based there, China, the platform that wins China is positioned to lead globally. And when they are locked out of China, that means that, frankly, domestic producers have the ability to catch up and gain share. So it raises a question. Do you want to decouple in this crucial industry, or do you want to keep your enemies close, right? Keep your friends close, keep your enemies closer.
And Jensen also talked about the fact that these competitors have evolved. And something he said to me a few weeks ago, he related to Ed last night. Huawei is, quote, quite formidable. That is not going to be the tone that this administration wants to hear as well, that Huawei is now quite formidable. And that's why Jensen Huang is basically saying they're already on par with us, so we should be there.
Ed is going to drop by a little bit later. We'll catch up with him at 8:15 Eastern Time. Let's stick with NVIDIA, reigniting AI optimism after beating earnings expectations.
Well, we got a whole bunch of engines firing right now. The biggest one, of course, is the reasoning AI inference. The demand is just off the charts. You see the popularity of all these AI services now.
Joining us now to discuss, Angelo Zino of CFRA, who has a buy rating and a $165 price target on the stock. Great to catch up with you, Angelo. Let's just start with the basics. What jumped out for you yesterday afternoon?
Yeah, I mean, I actually think you guys hit it in terms of, the China side of things. I think that's where all eyes were going into the print. And we saw them really kind of navigating the uncertainty, from China right now, and that $8 billion in lost revenue in terms of the guidance extremely well. We're not necessarily surprised by the fact that they're navigating it really well, because if there was a company that could do it right now, NVIDIA would be that company because of the immense amount of demand that they're seeing right now. I'd say the other thing right now is just the commentary surrounding these reasoning models, right? I think, back at GTC, Jensen was talking about potentially 100x, 150x, increased need for compute from these reasoning models. I think he even went as far as going somewhere along the lines of 1,000x on the call last night. So you're kind of seeing the fact that there is just an enormous amount of demand from the shift to AI agents here that we think will continue to ramp in 2025 and into 2026. And that is given really NVIDIA some really strong momentum. And, not to mention Blackwell is this really kind of shift towards, the infrastructure and the system side of things, completely different from what we saw in Hopper. And I think the upside we're seeing from Blackwell is stronger than I think most analysts here had anticipated.
There was a lot of positive discussion around NVIDIA's performance. There also is this existential threat, and you talked about it with China. This question of if there is some sort of decoupling and regulatory overhang, can NVIDIA continue and maintain its model? And Jensen Huang came out and said you cannot underestimate the importance of the China market. This is the home of the world's largest population of AI researchers. The company that wins China wins this war. Do you think the market's overly complacent about the risk that NVIDIA gets locked out of that country?
Well, I think there's two sides to this, right? I mean, I think one point here with regards to China is they've essentially de-risked China in many respects. And I think that's the side that the market is taking right now. It's like, it's one of those situations where, all right, we took the $8 billion hit. It was more than we thought was going to take place here in the July quarter. But we're not going to see another quarter where, China's going to be a huge negative headwind for this company looking ahead. But that said, the other side of this is when you kind of look here 2-3 years down the road, it is a huge opportunity cost if they can't get back into China. Our belief is that they will be able to get back into China at some point in time. I think the market also has expectations, just given the move we're seeing here, that eventually NVIDIA will be able to find its way back, whether it be, from, some sort of deal that the administration creates, or whether it be some sort of, maybe performance-laden type of chip that they can somehow find their way through into China, albeit, at significantly lower revenue potential than what they could have gotten. But nonetheless, I think there is, just belief out there that eventually NVIDIA needs to find a way back into China. Jensen isn't giving up on that hope that China will be a part of their business in the future. So I think that's why the stock is moving the way it is as well.
Do you think that the ruling that happened overnight really built on that belief in markets that NVIDIA will find its way back into China?
Yeah, I mean, listen, I think when you look at just semiconductors in general, I mean, they're largely exempt from, all this tariff-oriented stuff as well. They do fall under the more sectoral semiconductor investigation that we're waiting on right now. I think some of the comments that you guys earlier alluded to in terms of Jensen supporting the whole the tariff situation, I think is partly due to the fact that he is trying to position himself really well in terms of semiconductor manufacturing in the U.S. Not to mention a lot of the servers that he's making are coming from Mexico. So he's almost insulated, at least for now, from some of the uncertainty and some of the commentary that we've heard overnight or even over the last month or two tied to a lot of the country-specific tariffs that we've heard about.
We do have the Trump administration, though, moving to restrict the sale of chip design software to China. Yes. And what the reports basically suggest is this is a choke point. They want to cut off at the start where China can get access to this type of technology. But you sound optimistic that NVIDIA can still make its way back in China. How, when the administration seems to be clearly saying we are going to decouple when it comes to national security concerns?
Yeah, I mean, listen, I think, and in that EDA software, ban that we're seeing here, I actually think, it actually took longer than we anticipated. We expected to hear it, sooner than that. It'd also be interesting to see how aggressive the administration really wants to get here. I mean, there are other, levers that they can throw out there tied to the semiconductor equipment industry, for instance. So we'll see how far the administration wants to go with this. But as far as NVIDIA is concerned, I think ultimately, the administration has a price for anything, as long as they can kind of get their terms on the deals. So I think NVIDIA is going to be a hot topic when the two sides try to come together and have conversations in the coming weeks and months. So that is why we personally believe that there is potential for NVIDIA to kind of get back into China. Not to mention, we do think the administration isn't necessarily against NVIDIA selling into China as much as, especially if they can somehow, cut the expansion efforts for the local semiconductor industry out in China. So we'll wait and see. There's going to be, I think there are a lot of moving parts here, and you never know what's going to come from the administration.
Angelo, let's just finish on that point. Getting access and granting access to NVIDIA chips is becoming a foreign policy tool. It's something we discussed on this program just yesterday. What kind of characteristics does that introduce to the stock and how it trades?
I think that's a great point. I think it's a potential catalyst here for the shares. I think there's more upside than downside from that. You kind of look here over the next couple of weeks, months. I think you're going to see more kind of Saudi Arabia-oriented type deals, sovereign AI-related deals. You've got Jensen himself saying he's going to be traveling out to Europe here over the next couple of days. So it'll be interesting to kind of see when the timing of more announcements come tied to sovereign AI. But even Colette, alluded to the point yesterday that you are going to see more, more sovereign AI oriented deals. It's just they wouldn't tip their hat on when you're going to see these deals.
Angelo, appreciate your time. As always, sir. Busy night for you, I'm sure. Angelo Zino there of CFRA with NVIDIA. Nicely higher in the pre-market. Let's get you an update on stories elsewhere this morning with your Bloomberg brief. Here's Danny Berger. Hey, Danny.
Hey, John. Goldman Sachs says that the court ruling blocking President Trump's tariff is only a temporary setback to his trade agenda, and it can't be offset by other taxes. The bank says the ruling holds 6.7 percentage points of levies announced earlier this year, and that the White House could use other tariff tools to make up for that. Elsewhere, Annmarie mentioned this, the Trump administration moving to restrict the sale of chip design software to China. Sources telling us that the Commerce Department sent letters to some of the leading providers of electronic design automation last Friday, telling them to halt shipments to Chinese customers. Elsewhere, Elon Musk's time as formal advisor to President Donald Trump has come to an end. Musk posted on X, as my scheduled time as a special government employee comes to an end, I would like to thank President Trump for the opportunity to reduce wasteful spending. By law, Musk's status as a temporary government official was set to run out as soon as tomorrow. And that's your brief, John.
Danny, thank you. More from Danny in the next hour. Up next on the program, the data driving the bond market.
Once you see economic data start to move around,
that tends to drive bond markets more than supply. I think in the next few months, you are going to see some of the hard data start to moderate. You may even see soft data recover.
Up next on that, Bob Michele at JPMorgan Asset Management, live from New York City this morning. Good morning to you all. You're watching Bloomberg TV. A U.S. court overnight potentially upending the president's Liberation Day tariffs. The take on Wall Street at the moment. This from Jordan Rochester of Mizuho. In politics, when there's a will, there's a way. Tariffs haven't gone away. Equity futures fade just a touch. We're positive still by 1.1% on the S&P. On the Nasdaq, we're up by 1.6. Under surveillance this morning, the data driving the bond market.
Once you see economic data start to move around, that tends to drive bond markets more than supply. If you see economic data start to soften a little bit over the course of the next couple months, you could see rates move materially lower, even as term premium stays higher. I think in the next few months, you are going to see some of the hard data start to moderate. You may even see soft data recover, but maybe not to the levels that you saw before all this uncertainty started.
So here's the latest this morning. Investors are waiting another read on the state of the labour market, with initial jobless claims due out in just under 2 hours' time. Bob Michele at JPMorgan Asset Management writing the following. In the end, it's all about jobs and the labour market. With the Fed generally looking past near-term inflation data, the labour data becomes the motivating factor. Bob joins us now for more. Bob, good morning.
Good morning.
Good to see you. We've got a lot to get through, so let's start with growth. Do you think this bond market should be pricing in a step down in growth or a step up in growth?
I think probably a step up in growth, and that seems to be what they're pricing in today. We were looking at effective tariff rates yesterday morning were about 15%. Today, when I read Mike Sembola's stuff and you look at where the courts came in, but you assume the 232 section tariffs go through, you're talking about 10% effective rate. The economy could absorb that. And then you've got Congress. You've got the budget reconciliation package, which we estimate adds another $3 trillion to the deficit over the next 10 years. So there's an upward impulse to growth today.
Does that make you revise some of your expectations for how high yields can go? Because what you just expressed was resilient growth, the idea that the Fed can't cut rates as easily if the data doesn't roll over as quickly, and the idea that supply is going to be coming out at a time where inflation could potentially stay sticky.
Yeah, let's start with the Fed. We looked at the minutes yesterday. Our AI program, let's call it Kelsey, determined that there were 13 references to inflation expectations, whereas there were 3 a couple months ago at the March meeting. So the Fed is clearly focused on inflation and keeping inflation expectations anchored. As you think about the way things could play out, you're looking at higher prices first. That may create demand destruction, which then causes you to raise the probability of recession. But you have to get through the higher prices and see how businesses and households react to that. Now you've got to enter Congress, and Congress is trying to push through not only an extension of the Tax Cut and Jobs Act, but incremental spending. And you have to gauge, will that offset some of the impact of the tariffs? And it looks like it probably will.
I don't know how Kelsey Barrow feels about being sort of connected to a ChatGPT program. Kelsey, if you're watching, please write in and let us know what you think. I am curious, though, whether you have upgraded your expectation for yields. You didn't answer that because you had expected yields to be going down much more significantly when there was this overhang of potentially slower growth, the drag from tariffs, the drag from policy uncertainty.
Yeah, I'd be happy if yields held in around here. I think there is going to be an upward impulse because first we're going to see higher prices, and then it does feel that businesses and households can absorb that, and you're going to get some package out of Congress, which will help to offset some of that. I would say my greatest frustration of the last year is we hadn't actually been higher. I would have loved the 2-year to have been anchored around the Fed funds rate, 4 3/8%. I would have loved the 10-year to be at 5%. To me, that would have been a relatively normal curve, and yet we still have the 2-year and the 5-year trading below the Fed funds rate. So it makes it challenging for clients who want to get into the bond market. I'm still not having a single conversation with clients about wanting to get out of the bond market. It's all about where do we get into the bond market and how.
And it's all about the belly of the curve, which is what we saw yesterday in the auctions. It went very well yesterday for the 5-year. Today we've got 7-year. How closely are you watching to see, particularly with longer duration, whether you see a repeat of what happened in Japan, in the United States, with real pushback about long-term bonds?
So far, we're not seeing that. We're seeing flows coming in to the U.S. bond market from overseas, and we are seeing the long duration buyers, pension funds and insurance companies get interested, particularly in longer credit. So we're not seeing it. Certainly, Secretary Bessent has a couple tools. One is to either cancel or dial down the 30-year auctions. And that's something we heard out of Japan. It's something we saw out of the UK. That would certainly help to stabilize the long end of the market.
Cancel or dial down? You think there's real potential for that in the US?
100%. 100%.
Do you see enough in the market right now to force that kind of corrective action?
Treasurers are telling us, if there's no demand, why am I selling? I don't need to do that. And you've got a Treasury Secretary who has put out there, we're focused on the long end of the curve. We're focused on the 10-year. By the way, I think he's right. I think you've got to look at the mortgage market. You've got to look at the housing data. That's another bit of data we're watching. Housing should be fairly strong at this point in the cycle. It's not because of housing affordability, and mortgage rates are a big part of that.
So is that a strong argument to re-engage with the long end of the curve right now?
Okay, I quoted Kelsey. I'm going to quote another one I've heard you quote.
Please do.
Priya Misra.
Love Priya.
10 and 30-year part of the curve are risk assets. I don't want to be the one to stand in front of the steamroller right now. So I'm just going to pack into the intermediate part of the curve. There's lots for me to buy there in credit and in securitized and in foreign bond markets. I'll let somebody else help stabilize the long end.
You think it needs to get worse before it gets better?
I'm concerned that it's going to get worse before it gets better.
Can you describe what worse looks like?
Yeah, if I start with the 10-year, I think going to 4.95, we've been there. The market can support that. In my mind, where pain really starts to get felt is 100 basis point shift up from where the steady state was. And the steady state's been around 440. So once you break above 5%, if we get to 540, that path between 5 and 540 becomes almost unbearable for bond investors. And I've lived through those 100 basis point shocks before. It always seems to be 100, and then things tend to stabilize. Where does that put the long end? You know, add another 25 basis points on top of that for the 30-year. To me, that would be real pain. You'd need to see policy response, both from the Treasury and from the Fed.
Bob Michael, this was fantastic. Deeply thoughtful stuff. A special thanks to Bob Michael, to Kelsey Barrow, to Priya Misra of JPMorgan Asset Management, and maybe Secretary Bessent's listening a little bit as well this morning.
Yeah, potentially Secretary Bessent is listening. What we do know, to Bob's point, is that this administration is squarely focused on the 10-year yield, and they want to see it go lower, and they definitely want to see mortgage rates lower.
We're focused on the equity market this morning. It's doing better, up by more than 1% on the S&P. Up next on the program, we'll catch up with Barbara Doran of BDA Capital Partners, Libby Cantrill of Pimco, Dan Ives of Wedbush, and Michael Zezas of Morgan Stanley. The second hour of Bloomberg Surveillance is just around the corner.
The trade issue is not going away, right? We're going to have tariffs.
Trade policy is still quite a problem for most folks.
That 10% tariff doesn't look like it's going away.
So what we're seeing is the opposite of globalization.
At the end of the day, what does Donald Trump always want? He wants investment in the United States.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Live from New York City this morning. Good morning to you all. The second hour of Bloomberg Surveillance starts right now, and your scores look like this. Equity futures positive by 1.1% on the S&P, up nicely on the Nasdaq by 1.7%, up also on the Russell. The small caps rallying by 1 full percentage point, driven in part by these words: the worldwide and retaliatory tariff orders exceed any authority granted to the president by IEEPA. The words of the court overnight.
Yeah, this is the trade court in Manhattan that ruled against his use of IEEPA emergency actions and powers to enforce some of the tariffs, not all of the tariffs. The commentary on Wall Street has been basically this is a roadblock. We've talked about this. It's not that necessarily we're going to see the path change. Nonetheless, it at least extends the time frame and gives people the sense that maybe companies have some more time to rearrange their supply chains before they get hit particularly hard.
Well, this is one of the biggest questions I have this morning. They're given 10 days, the White House, to basically complete the formal process of halting these tariffs. But the White House is appealing that the decision stays, the tariffs stay as this works through the court. So that's something that businesses will need to deal with this morning, whether or not are these tariffs actually going to stay in 10 days or not. Then you need to ask, if they're not going to stay, what path is the administration going to take? And what I find so fascinating about this court ruling is that the court ruling gives the administration a path to take. It tells them here's another legal venue you can take in Section 122. It's 150 days only, but it's a bridge for the administration to figure out the remainder of their tariff policy.
It took a while, a number of hours, to process the decision and what it could mean, but overwhelmingly, I think the consensus building on Wall Street around the following. This from Goldman: they'll find other ways to impose tariffs. And I wonder, if we didn't have this move on Nvidia this morning, just how positive equities would be on the S&P 500 off the back of that headline. Nvidia this morning, Bramo, positive by more than 6% after earnings yesterday.
They reaffirmed their guidance even with an $8 billion hit in China, talking about the idea of immunizing themselves from the risk of increased regulatory pressure and a decoupling between the U.S. and China. What I find interesting is that these stories are linked, that there is a belief, as we were hearing the last hour, that actually NVIDIA will still get back to China, and that if they can't get back to China, then you do have to reassess things. But ultimately, people feel like you'll really get this sense that there isn't going to be a bigger decoupling. How much is that belief underpinning some of the strength that we have continued to see, regardless of any court ruling?
And whether or not they can get back to China. Jensen Huang on the analyst call was basically saying we're considering making another chip. But they don't know yet if they're going to. And if it's not the H20, what chip could they make that would be export control compliant with this administration that actually is ratcheting up when it comes to the curbs going to Beijing on a lot of these licenses?
That stock bouncing this morning by more than 6% so far. More on that a little bit later. Coming up this hour, we'll catch up with Barbara Doran of BDA Capital Partners on a risk-on mood, Libby Cantrill of Pimco on the future of President Trump's trade agenda, and Dan Ives of Wedbush as NVIDIA eases China concerns. We begin this hour with our top story. Stocks higher as a U.S. court compromises the president's Liberation Day tariffs. Joining us now is Tyler Kendall of Bloomberg down in Washington, D.C. Tyler, let's talk about to what extent this does compromise the president's strategy.
Yeah. Hey, John. Well, as Kellyanne Shaw said on this program earlier last hour, this basically is sand in the gears. But at the end of the day, it slows it down. But it doesn't mean that tariffs are going away. What the court did was it found that the Trump administration improperly invoked IEEPA, the International Emergency Economic Powers Act, to impose the so-called reciprocal tariff plans. The administration had been arguing that persistent trade imbalances amounted to a national emergency. But the court said that didn't meet the standard for an unusual and extraordinary threat in order to invoke the law. Now, it also extends to those other instances of IEEPA, including tariffs on Canada and Mexico and also China, invoked on the basis of concerns over the U.S. border and fentanyl. But it doesn't extend to those sector-specific tariffs that have been put into place under Section 232 over national security concerns. And while it might slow down the process, at the end of the day, John, it's unclear exactly when this is actually going to take effect. The court has given the Trump administration 10 days to work out sort of the administrative moves that need to happen in order for the tariffs to be removed. But the White House is appealing this decision. They want an immediate stay. And there's a chance that this ends up in front of the Supreme Court, which means it's going to take time to make its way through the system.
So the president has said he has a number of potential trade negotiations in the hopper, his words. What does all of this mean for those current talks?
Right. That's going to be one of the big next questions here. Do our trading partners decide to sort of hold back here and wait to see if this gives them any more leverage, or do they continue with these negotiations, considering that when we do talk about these other levers that the administration can pull, it's really there's no doubt that tariffs are still going to remain in place here at the end of the day. And think about how some of these trading partners like the European Union are getting hit particularly hard when it comes to those sector-specific tariffs like steel and aluminum, as well as autos. One of the big questions here is what's going to happen to the agreement that's already been put into place when it comes to the United Kingdom and that 10% levy that's supposed to stay in place.
Tyler Kendall with the latest down in Washington. Tyler, thank you. July 9th, the key deadline. A key self-imposed deadline for the discussions with trade partners. And I just wondered to what extent, to what degree it does compromise those talks in the weeks to come.
Does it mean that that deadline gets pushed back? Or potentially does it mean that the administration, especially if they get the stay and they can keep these tariff levels, that they want to actually accelerate the talks and get to a final deadline?
All of us just glued to social media this morning, waiting for the first word to come from the president at some point. Here's the view on Wall Street. Barbara Doran of BD8 Capital Partners writing, still ahead, which means more volatility, more tariff announcements, and the ongoing tax bill/budget negotiations. Barbara joins us now for more. Barbara, good morning.
Good morning.
How much of a game changer is it, what we saw overnight?
I think there was an initial, and you see it in the futures last night, we're up 400 points. A lot of excitement, hope that this really is a game changer. But I think, that we're quickly learning there's so many options that the administration can employ and whether the appeal. And we don't know how that's going to translate in the next few weeks. Things get on hold. There were supposed to be these big tariff announcements, as you just mentioned, this week. We don't know what that means. So in terms of uncertainty, nothing's really cleared up because they will fight it tooth and nail. And so we're still going to have tariffs of some level, and maybe it means they're going to be less. I don't know. But this doesn't clear it up. So today we're going to have, in combination with the great NVIDIA earnings yesterday, we're going to have a good day, but it may be short-lived.
I want to build on that. This idea of dissecting, and John referenced this earlier, how much of the gain that we're seeing in markets is due to NVIDIA and, frankly, other corporate earnings that have been pretty positive versus a court case, especially given the fact that you're not seeing that commensurate move in the currency markets to the degree that you would expect.
Yeah. Now, it's interesting because NVIDIA and the semiconductor AI plays have really disconnected from the market, in the last 6 months. So it hasn't been a bellwether for the market. However, it is a bellwether for AI and all that. So I think it's very positive. We're just ending the first quarter earnings report. It's 96% have reported, 78% have beat earnings estimates. And there's been some cuts and some cutting of guidance, but not a lot. So you're starting to see second quarter, estimates in early March were about 9%. We're now down to about 5%. But still, things are positive. We have great forward momentum in the economy, and everything that's coming in, jobless claims, CPI a week ago, and of course we have PCE tomorrow, is showing things are good. The tariff impact has not yet fed through the economy. And of course, you saw the consumer confidence numbers, just a couple days ago, big jump up. It shows, and that's really, I think, this lessening and the China 90-day pause, because obviously China is very key for all this. So.
Yeah, if your head's spinning because all of the narratives are kind of collapsing on top of each other and very difficult to piece out, join the club. You talk about better than expected economic data, and we do see the Citigroup U.S. Economic Surprise Index going to the highest levels going back to February. I just wonder if the takeaway from the past couple of weeks, including the court case, including the potential delays, is that the worst case scenarios have been taken off the table, that the tail risk has been curtailed in a significant way that can give you confidence to come up with some sort of strategy for the rest of the year.
Yeah, I think that's definitely the case. And that's where you've seen, this has been a rapid rebound. When you've seen the market off 15% from its highs and such a rapid recovery, we're not yet back to the highs, but, the history shows that typically 6 months out, you could be at new highs. So this is very positive. It's been very bullish action, this last week in this recovery. So I think the worst case is definitely off the table, no matter what happens in the court case and if it drags out. But I think that's what's giving people a lot more confidence. The question is now, obviously at 21 plus times forward earnings, we're well above the 5-year and 10-year average for the market. So where do we go from here? I think it just means more volatility. We're going to still be, captive to headline risk, which, this one is case in point. And so what's tomorrow's going to be? But I think it's a problem. I think the market, has probably some near-term upside, but there's a trading range here.
When you see headlines like this, and the Wall Street Journal this week had a front page story that analysts are saying we're past peak uncertainty when it comes to trade. Do you agree with that? How is this past peak uncertainty?
No, it's a great point. I think what they're really saying is we're not doing the 130, 140% tariffs on China. So we're past those draconian. It also looks like Trump, every time it gets to that, he is backing off. this whole taco thing.
Don't call him a chicken.
I know. So anyway, yeah, I think we're not past, we may be past peak uncertainty in terms of fear of what it could all mean and how disastrous, the worst case could be. So that would be, we're past that. We're not going to see the economy collapse. And I think that was it was on the table. I mean, people were upping the recession risk. Pardon me?
Aren't we priced for that now in equities, moving away from the end of the world?
No, we are. Well, no, we're not priced for that. And we are priced for it in the sense that if we've taken that off the table, the market has recovered. The question is, where do we go from here? And I think we'd have to see. We'll see what happens with inflation, but it's really now more about growth. And it's hard to see where the stimulus is coming from. It's certainly not fiscally. We've got to see what the Senate does with the budget negotiations. If they can rein in the deficit, which is also a problem on the long end in bonds. That's hard to see, rates coming down. We've just got too much supply. We've got an issue.
You don't think the fiscal stimulus offsets the tariff drag?
No, we don't have the fiscal stimulus. I mean, we're going to see a lot more of this onshoring effort, which is already happening. That's been happening since COVID. And everybody said, oh, my God, we've got to get more reliable, supply chains here. But, the fiscal stimulus in terms of government spending, no, that's not going to be there.
Barbara, appreciate your time. It's good to see you. Thanks for dropping by. Barbara Doran there of BDA Capital Partners. Equity futures doing OK, positive by about 1 full percentage point. A major slice of that, though, a big piece of it, is this rally we're seeing in Nvidia in the pre-market. Let's give you an update on stories elsewhere this morning with your Bloomberg brief. Let's cross over to Danny Berger. Hey, Danny.
Hey, John. Some breaking news in the past few minutes. United Airlines has signed a partnership with JetBlue that will let travelers use loyalty points and book flights across both carriers. The deal will integrate operations between the new airlines in the New York City market, giving United a presence at JFK Airport and JetBlue access to some of United's flight times at Newark Liberty Airport. Elsewhere, Tesla plans to launch its long-awaited robo-taxi service in Texas in 2 weeks. Sources telling us that Tesla has been testing its autonomous vehicles in Austin, including a recent test with no one in the driver's seat. It will start with a fleet of around 10 self-driving robo-taxis before expanding to 1,000 vehicles within a few months. And in sport, Chelsea now has its first trophy under the ownership of Clear Lake and Todd Boehly. After trailing in the first half, Chelsea fought back to beat Real Betis to secure a 4-1 win in yesterday's final of the UEFA Conference League in Poland. The victory now means that Chelsea are the first club to win all 4 of the major UEFA trophies. And that's your brief, John.
Danny, thank you. We shouldn't pretend that is a major trophy. Chelsea fans might. But
Ed
we
Ludlow
shouldn't. Did Ed pretend that was a major European trophy?
He took a break from Nvidia and was like,
Okay.
I just have to celebrate what's going on with Chelsea.
We'll take issue with that a little bit later in the programme. Up next, Trump's tariffs under threat.
Wall Street analysts have coined a new term called the taco trade. They're saying Trump always chickens out on your tariff threat.
And if I set a number at a ridiculous high number and I go down a little bit, I chicken out. I've never heard that.
Up next, Libby Cantrill of Pimco, live from New York City this morning. Good morning. Lots of you writing in, lots of you publishing. This is the latest from Evercore and Krishnagua off the back of this court decision here in New York. It's risk-friendly, but does not mean an end to Trump trade wars, with the administration likely to backfill with actions under more conventional and legally secure authorities. That's the consensus building on Wall Street this morning as the gains fade in the equity market on the S&P 500 at the moment. Still up nicely, but Nvidia in the mix here in a big way. The S&P 500 up by more than 1%. The Nasdaq up by 1.6%. Under surveillance this morning, Trump's tariffs under threat.
Wall Street analysts have coined a new term called the taco trade. They're saying Trump always chickens out on your tariff threat.
And if I set a number at a ridiculous high number and I go down a little bit, I chicken out. I've never heard that. You mean because I reduced China from 145% that I set down to 100 and then down to another number, and because I gave the European Union a 50% tax, you call that chickening out?
Here's the latest this morning. A federal court blocking President Trump from imposing his sweeping Liberation Day tariffs. The White House is vowing to appeal. Libby Cantrill of Pimco joins us now for more. Libby, good morning.
Good morning.
What's the message from you to the clients this morning?
Yeah, I think what the message is that the worst case has been avoided for sure. I think that, like your previous guest, we are not going to see, unlikely to see 145% tariffs rolling back on in China. However, it is not an all clear, and that's for the very reason that you just mentioned, which is that the president has wide latitude using other statutory authorities, whether it's something called Section 122 of the 1974 Trade Act that allows him to impose up to 15% tariffs for 150 days. I would not be surprised if we saw him actually move forward with that, replacing that 10% baseline that was just obviously rolled back by the courts and using that authority. He also has Section 301, which he could impose tariffs on China immediately. That's a live, active investigation. And there's something called Section 338 from the 1930 Tariff Act. So I think the upshot here is that IEEPA provided him with a lot of flexibility, a lot of negotiating power, because he could roll tariffs on and roll tariffs off. These statutes are more limited, usually require some investigation and what have you. But the upshot here is that there is not an all clear from a tariff policy perspective. We will see additional tariffs. And again, I would not be surprised if we didn't see them over the next few days or so.
Well, let's explore the 122, which everyone, even this court, thinks Trump should have used. Is that the end destination, or is it bridge to another authority like a 338 or 301?
Yeah, I mean, I think that's an excellent question. Because Section 122 does have these sort of limitations, you can only impose them for 150 days, and then they have to basically go back to Congress to move forward. I think that it will look likely a bridge to something else, probably to Section 301. Again, I think that if you kind of go back to January 20th, when President Trump was inaugurated, those were the authorities that I think many of us thought he was going to use. I mean, there was wide question about the legal ability for him to use IEEPA in this very broad-based way, and then, of course, to use them on countries with whom we have trade surpluses, I think did call into question whether this was sort of a national emergency and what have you. So I think all those authorities that were available to him January 20th that we thought he was going to use, I think those seem more likely. But again, those do have some guardrails. Some of them do require some investigation, so they're longer based. I would say the upshot, though, is that they're more legally durable. So they're not going to be as vulnerable to a legal challenge as certainly IEEPA obviously was.
What happens with the UK right now? Because that is a deal that's already been struck but kept a 10% baseline. Now the court is saying that 10% baseline is illegal.
Yes, so I think that remains to be seen. Now, I don't think, the UK hadn't really seen that deal materialize. That was a little bit in name only. So I think, again, it's open question what happens to that deal, but then also to all these open negotiations, whether it's with the EU or Japan. I think importantly, though, some of the more punitive tariffs as it relates to, say, Japan, this Section 232 25% tariffs on autos, those stick around, right? So that is a legal authority that is durable, that has not been overturned by this court decision. So that is an important kind of something to factor in.
If you're a corporate executive, there are a couple different ways to look at this. On one hand, you could say the path of travel is still clear. There are going to be other methods of tariffs that are put on. The other way you could look at it is this all feels very fungible, changes on the day. If I wait it out for a couple years, I can just keep my plans in place, maybe delay things, but keep everything kind of the way it was before. Which path are they picking?
Yeah, I think that's also an open question. And I think obviously depends on the sector. I think what we've seen from some companies is that they have announced some future investment. Whether that investment actually comes to fruition or not, I think, again, remains to be seen. So obviously a lot of open questions here. But I do think this underscores for a company just how much uncertainty there is around this agenda, and the fact that President Trump is only going to be in office for the next 3.5 years. Regardless of what happens, he is not going to be running for re-election. We will have a different president come 2029. And so if you are a corporate executive, that obviously is going to inform your perspective. I only highlight that because I do think if this were the first few months of his first administration, then those corporations may be more willing to make those investments than they are now, just because of the shorter period of time.
So let's build on that. Each delay, does it matter? In the sense that, yeah, it's just, okay, 10 days, 20 days, 2 months, it's not that big of a deal if the path of travel is still the same. Or does it? Are some of these delays actually crucial for these companies to understand how to navigate this?
Yeah, and again, I think this is what, I think we should watch over the next few days, because if they do, move forward with a, say, universal tariff under Section 122, then I think it's going to be a reminder that, again, these tariffs, maybe via different statutory, avenues or what have you, are going to be here to stay. So I do think it matters, but I think the upshot for investors, for our clients, is that the worst case scenario has been avoided. That 30% effective tariff rate that we were all looking at, in those first weeks of April, that is very unlikely to come to fruition just because of the limitations around these other statutes. But again, I think this is not an all clear, and from a financial markets perspective, I think that's a really important message.
Do you think, though, it changes the White House strategy of wanting to get this all wrapped up by July 9th?
Well, yeah, I think the July 9th sort of that deadline becomes a little bit irrelevant, right? I don't know if you're the EU, do you still have that same sort of, immediacy or a sense of urgency in terms of negotiating or making concessions with the Trump administration? Probably not. Now, again, if we think that the Section 122, say a universal tariff, is a bridge to a Section 301 tariff, which could be, deeper and more broad-based tariffs on countries specific, then I think that will bring negotiating partners to the table. But I do think this really sort of changes the calculus. One last thing I will just say, though, and something I think our traders have already asked me last night, is does this change sort of the calculus around the tax bill, right? If you're a member of Congress and you were expecting $250, $300 billion of annual revenue from tariffs, does this make you a little bit more queasy to actually vote for sort of this big, $3 trillion plus bill? I think probably not. I actually don't think this really does change that. But I think intellectually or academically, you might think that it would. I just don't think it does.
Does it change the bond market's response?
I do think, I think, you're seeing a little bit of relief in the bond market. Maybe from an institutional perspective, this sort of reminds, foreign investors in particular that there are some checks and balances on presidential power. I think a lot of our foreign clients had thought, we thought that there was, the Congress and the judiciary. And I do think this sort of reasserts the fact that, yes, there are going to be some limits. The president and his team, I think by design, want to push the limits of executive authority. But there are some checks. The bond market, but also the courts, more importantly.
This is actually an argument that Peter Navarro made in an opinion piece just yesterday. He's catching up with us a little bit later this morning, making the argument that he was complaining about the scoring down in Washington, that it didn't account for the tariff revenue, and this might be an explanation as to why it didn't.
And he's still pushing for this idea of the External Revenue Service, this basically what we already have with the customs, to bring in all of that money to offset the tax plan. But to Libby's point, it doesn't really matter.
Libby, just quickly, for anyone playing trade section bingo this morning, 301, unfair trade practices.
Yep.
Why didn't they start that this time around? They did in the first term. Why not in the second term?
Because that does require months-long investigation. It's a little bit of a nuance. There's an open investigation on China, this Section 301 investigation, so they could have imposed tariffs on China using that open investigation. But for any other country, they would have to actually pursue another kind of months-long investigation. But again, as to our conversation earlier, I think they could use Section 122, a temporary tariff, to get to a broader destination in terms of more tariffs on other country specifics.
Libby, this was a clinic, as we expected it to be. We appreciate it. Thank you. Libby Cantrill
so much. Appreciate
of Pimco. Sand in the gears. We've heard all sorts so far this morning, but ultimately it doesn't change the president's pursuit of his ultimate objective, which is to put tariffs up on some of our trade partners.
And Libby just said, expect it in the next couple of days. It's not necessarily going to take weeks. He'll just go to other provisions. The key question is, and I think it's a good one, does this change the calculus as far as revenue for the government from some of these tariffs?
Equities positive this morning by 1 full percentage point. That is down, not just to this story, but also to this one. Dan Ives of Wedbush on why he thinks Nvidia is still fueling the AI revolution. Nvidia, and that conversation is up next. Live from New York City this morning. Good morning. You're watching Bloomberg TV. The bounce is being sold. Equities just about positive by 1% on the S&P, up on the Nasdaq by 1.4%. Overwhelmingly, the takeaway sounds like this morning on Wall Street. Pimco's Libby Cantrill, it slows them down, but ultimately they won't change course. BMO just moments ago, while the ruling could greatly limit the White House's ability to wage a trade war, uncertainty about future trade policies will remain high. And I mentioned Evercore a little bit earlier on. It does not mean an end to Trump trade wars, with the admin likely to backfill with actions under more conventional and legally secure authorities, which is why some of this fades. A reason why it's not fading, though, is Nvidia still flying in the pre-market. So let's get you that and more with your morning movers. Here's Danny Berger. Hey, Danny.
Hey, John. Yeah, with this move, Nvidia, when it opens, should yet again become the biggest company in the world, taking over Microsoft's market cap. It was up 6%. It's ebbed ever so slightly to 5.5%, but still decisively up. $45 billion is their expectation for second quarter revenue, and that is despite an $8 billion hit from China. So the news still good there. Also looking at Kohl's, they reported earnings just moments ago. Those shares also up 4.3%. One thing to keep in mind, though, these are down 40% so far this year, so expectations were quite low because they reported comparable same-store sales that were down. They just weren't down as much as expected. It's been a really tumultuous period for them. They've been trying to re-engineer a turnaround given those slowing sales, and they had quite a dramatic exit of their CEO earlier this year, too. We also learned in the past half hour about a new partnership between United and JetBlue. Both those shares up at least 1.5% off the back of that. You'll be able to use loyalty points and cross-book between the two. I think the new program is called Blue Sky Alliance, if I'm not mistaken. As part of this alliance, United will also get to use some of JetBlue's airways in JFK, so they become a little less reliant on Newark. And JetBlue, for its point, will be able to use some of the time slots for United at Newark, although those shares now just turning negative. But United still up 2%, John.
Danny, thank you. Didn't JetBlue do this with American not so long ago, and then the courts basically blew it up?
There have been different tie-ups with JetBlue. Spirit and JetBlue were talking about tying together, and that got blown up by courts. American, I do wonder whether this avoids some of that antitrust concern, given the fact that it's very delicately crafted.
Okay. It's one to watch, that's for sure. On our radar this morning, our top story, President Trump's trade strategy upended. A U.S. court declaring the president wrongly invoked a 1977 law by imposing his Liberation Day tariffs. The White House planning to appeal the ruling.
They're going to plan to appeal, and they're probably also going to plan to find another avenue to keep the tariffs in place, like 122, which we've talked about. Even in the ruling itself, it says this probably would have been a better idea, more legally sound. I want to go back to what you said earlier when you mentioned Neil Dutta. Tariffs are a dial, not an on and off switch. And if you think the judiciary gets to be the one to turn the knob, seek help. AKA, this administration has a plan in place. Yes, there might be a detour in the journey, but the end destination is very clear.
They've got a lot of tools at their disposal. I think you said earlier on the programme there's a lot still on the menu. You'll hear people talk about Section 232, national security, that's still aluminum. Section 301, that's how they pursued tariffs in the first term against China. There's a lot this administration can still do.
At the same time, they want to move fast. And some of these other measures take a longer period of time and have bigger caps. In other words, they can't raise tariffs as high. So it raises a question about, again, what people have been talking about, the worst case scenario being taken off the table, some tail risk being taken off the table, because they can't move as fast as they want to, given that this president only has 3.5 years left.
We've all asked this question. I just wonder how it influences negotiations in the coming weeks. How seriously the Europeans say, who are facing the threat of a 50% tariff on July 9th, how seriously they take that this time around.
So I think this is twofold. One is that in Section 122, which is if they go that route, you can only go as high as 15% for 150 days. So the sky high 20, 30, 40, 50% tariff levels, those come off the table, which you think if you're negotiating with the White House, that gives you a lot more leverage. But Libby made a really great point, Libby Cantrill of Pimco. When it comes to some places like Japan and the European Union, the 25% auto tariffs, those stay. The court's not saying those aren't legally sound, and that is something that you have the European Union, Brussels and Tokyo, they want to see that 25% lifted.
That's the latest on trade. We'll be returning to that, of course, throughout this morning. The latest on Nvidia, delivering a solid sales forecast, ramping up Blackwell chip production and saying the AI market is poised for exponential growth. But the chip giant expecting an $8 billion revenue hit in its fiscal second quarter on China export restrictions. That stock is still flying by 5.6%. We'll come back to that in just a moment. Wanted to squeeze this in. First buddy, Elon Musk time at the White House coming to a close. Musk posting on X, quote, "I would like to thank President Trump for the opportunity to reduce wasteful spending. The Doge mission will only strengthen over time as it becomes a way of life throughout the government.
A way of life throughout the government, potentially. Remember, Elon Musk busted into the scene in Washington, D.C. I remember him talking about cutting $2 trillion from the government. He did not do that. It's really a far cry from what he was able to cut, more like in the low hundreds of billions of dollars. And now he's leaving. And I think there's a big question on how much influence he's still going to have in this White House, given the fact that he's going back to Austin. He's really focusing on Tesla.
I wonder if there is a legacy, though, whether it helped reshape the psychology and how we approach spending in Washington, not just for people who work in Washington, D.C., for the country at large. I think this brought a massive light, shone a huge light on how much wasteful spending was taking place in Washington.
There was a lot of popular support for cutting waste. Question is, how do you do that? And my question is, going forward, is there going to be a methodological way to go through, understand which programs could potentially be run more efficiently? And if that's the case, I think a lot of people would cheer that on all sides of the aisle.
That's the latest in the nation's capital. Let's turn back to NVIDIA, the chip giant, delivering a solid sales forecast despite restrictions on China exports.
Well, we got a whole bunch of engines firing right now. The biggest one, of course, is the reasoning AI inference. The demand is just off the charts. You see the popularity of all these AI services now.
That was Jensen Huang. Dan Ives of Wedbush has this to say. There is one chip in the world fueling the AI revolution, and it's NVIDIA. The AI revolution is heading into its next gear of growth despite the Trump tariff war playing out. Dan joins us now for more. Dan, good morning.
Great to be here.
What did you like most yesterday?
I mean, look, the godfather of AI, Jensen, delivered yet again. And I think if you look demand outstripping supply, we believe 8-1. And despite the China tariffs, I mean, I think if you look apples to apples, that would have been a $53 billion number compared to where the street, apples to apples, would have been at $48 billion. I think it just shows there's only one chip fueling this AI revolution. It's Jensen and NVIDIA.
There's a question of whether they'll be allowed to fuel that AI revolution. In other words, if they will be allowed to move into China in the way that they kind of need to longer term in order to maintain that dominance. What about yesterday gave you that confidence, given the fact that there still are some pretty existential risks about their ability to operate in China?
Yeah, I know you'll talk to Navarro after. Look, the reality is that Jensen and NVIDIA are essentially giving away their China business. On a silver platter, Huawei, here's our business. And that's the reality. And I think more and more, there's going to have to be some negotiation where they're enabled behind, right now, back against the wall. They need to have a chip that U.S. sanctioned that they could sell into China. Because otherwise, all you're doing here is you're cutting them off at the knees, and Huawei is getting that market. And that's the reality. And I think that was a shot across the bow last night from Jensen. They're in a position of strength. There's one chip in the world fueling it. They continue to see demand that's, I believe, staggering.
There was sort of a subtle narrative shift. There's been a tone from the administration, both this one as well as the Biden administration, that the way to curtail China's advance is to limit some of the exports of U.S. chips and U.S. technology to the world's second biggest economy. It seemed like Jensen Huang was saying that's not right. They're actually catching up. And if we separate ourselves, we're going to fall behind. How much is that catching on in any kind of policy circles, but also within the tech circles?
Yeah, I mean, as someone like myself, I've done so much of my career, in China, in Taiwan, throughout Asia. That's unrealistic that think that China's just going to sit there. I mean, if you put them in a box with 2 toothpicks, seltzer water, and sunglasses, they'd come out with a chip. So the reality is you don't want to give them fuel. And I think that's what Jensen's talking about. You have some of the best engineers in the world. Right now, for the first time in 30 years, the U.S. is ahead of China when it comes to tech. Don't cut U.S. tech off at the knees. And I think that speaks to NVIDIA, speaks to Apple. And I think those are some of the things that you're hearing across the board that we're seeing in tech. And I think that's some of the damage and the balancing act that you guys see with these tariffs.
Do you think Jensen Huang then is going to have the company develop a chip that is export compliant to go into China?
100%.
But why would he do that if he did that with the H20 and then the United States said you can't sell it?
It speaks to negotiation because it comes down to, like, Jensen also recognizes in the Middle East and the red carpet tour, and the reality is, what's that tour without Jensen? What happens to Jensen? Yeah, we're not going to sell in the Middle East. I mean, it just speaks to, like, our biggest chips on the table, it's NVIDIA, it's Apple, in terms of broader negotiation.
But why would China want to buy a lesser chip when Jensen Huang is saying himself that Huawei, which is blacklisted by the United States, is quite formidable.
Look, and I think that right now is like they're going to come up, whether it's something like beyond an H200, less than a Blackwell, some sort of converted chip, because they need to stay ahead of Huawei in the China market. And that's why when you look at the reaction here, why tech's going to be up so much, despite, even like the trade rule and everything we saw, it's because NVIDIA shows that this AI revolution right now is the ripple effect, but it all starts with NVIDIA.
Don't you think there's some tension brewing here?
100%.
The president doesn't want them selling into China. Jensen Huang's trying to create an argument that they should sell into China. The Wall Street Journal reporting this morning. I'll read this verbatim. Fresh accusations from US lawmakers that the company is too close to China. They've received a letter from a Republican, Senator Jim Banks, a Democrat, Senator Elizabeth Warren, accusing them of being too close to the second largest economy on the planet. How do you actually think this is going to play out?
Look, I remember, it's easy, when you're in the beltway in front of a microphone, it's easy to say things, right? The reality of the markets are different. And I think it just comes down to U.S. tech. Part of why U.S. tech's leading China is that you need to have that market open up. And it speaks to the U.S.-China negotiations, why it's so important, not just for names like NVIDIA, but for Apple as well as the hyperscalers.
You say you need to have that market open up. Who's you?
U.S. tech needs that
US
market.
Yes, US tech does. Washington, D.C. disagrees.
And
isn't that the ultimate point of tension? And I would argue who wins out? The person setting the rules, which is Washington, D.C.
And I would, and I think that point in tension has been there for years. But the reality is that by ultimately closing off that market, what you're essentially doing is you're cutting U.S. tech off at the knees, and on a silver platter, you're making China stronger. So it goes to the whole Twilight Zone, however you want to think about it, is that this is all giving China an upper hand. That's what Jensen's saying last night, is like, we're leading. You continue to go down this path, Huawei will continue to narrow the gap.
To build on what John is talking about, there was a feeling that national security concerns would take precedence over profitability, over this idea that the tech giants really were necessarily leading the world. Do you think that that argument has fallen apart and that this administration essentially has put tech giants and their dominance at the forefront, even ahead of national security?
And I think it's I think it speaks to, and I think that Middle East trip was a watershed event, because it shows the AI revolution now coming to the Middle East. But what does that mean without NVIDIA, without Amazon, without the hyperscalers?
Also, AI revolution coming to the Middle East with a caveat. They need to make sure there are guardrails so that these AI data centers do not have U.S. technology leaking to China.
And to your point, you can't have both. You can't have your cake and eat it too, right? The point is like, how could you do it with the Middle East, but then China be like, okay, you can't have these chips, but we're going to sell next-gen Blackwell chips to Saudi, UAE. And I think that's part of the issue. Like, John, I think that's part of the issue here, is that, like, how do you balance that and talk out of both sides of your mouth? And the reality is what Jensen's saying is, stop tying our hands behind our back. Stop giving this market to Huawei. Let us go after that market.
I appreciate the argument. I just wonder how persuasive it actually is in Washington at the moment. Dan, enjoyed stress testing this argument. And I can see how bullish you are. Bright orange, bright pink. Dollar signs on the sneakers today. NVIDIA's higher by 5.5%. Speaks for itself. Dan, thank you, sir.
Thank you.
Dan Ives of Wedbush. Let's get you an update on stories elsewhere this morning with your Bloomberg brief. Here is Danny Berger. Hey, Danny.
Hey, John. Best Buy falling 2% in the pre-market, cutting its full-year forecast as it faces tariff impacts on imports from China, its top source of goods. Best Buy also dealing with consumers pulling back on discretionary purchases. Best Buy has struggled with sales declining over the past 3 years. To the upside, Kohl's shares are higher by more than 5%. It reported better than expected comparable sales, confirmed its full-year outlook. Kohl's is currently looking for a new CEO after firing its previous leader after only 4 months in the job for directing millions of dollars of business to a person with whom he had a personal relationship. Meanwhile, Elon Musk is taking an optimistic view after the third mid-flight loss of a SpaceX Starship. The mission ended about halfway into the flight when Starship spun out of control and disintegrated. In a social media post, Musk praised how long Starship flew and the strength of its heat shield. He also vowed to speed up launches to one every 3 to 4 weeks. And that's your brief, John.
Hey, Danny, thank you. More from Danny in the next hour. Up next on the program, the trade story isn't over.
This was not the president's only avenue for imposing tariffs, and the story here is not done. It would be a little bit foolish for countries to just assume that this is over for the president.
Up next, Michael Zezas of Morgan Stanley, live from New York City this morning. You're watching Bloomberg TV. We said this earlier this morning. You can thank 3 judges on a U.S. court and a rally in NVIDIA for this morning's rally. Equity futures on the S&P up by 1%, on the Nasdaq up by 1.4%. The move in NVIDIA in the pre-market looks like this. In the pre-market right now, higher by 5.36% off the back of earnings and guidance from the company just yesterday. Under surveillance this morning, the trade story isn't over.
This was not the president's only avenue for imposing tariffs, and the story here is not done. The president has a menu of options to choose from when it comes to tariffs. This is going to be challenged in the courts. It would be a little bit foolish for countries to just assume that this is over for the president.
Here's the latest this morning. A federal court blocking some of President Donald Trump's Liberation Day tariffs. The White House vowing to appeal. Michael Zezas of Morgan Stanley joins us around a table for more. Michael, good morning. It's good to see you.
Good morning.
This from Deutsche Bank this morning, glass half full, is that it reaffirms a peak in macro noise related to trade, in that it increases the likelihood that tariffs are shaped less by geostrategic considerations and more sector, product, country wants. Would you agree with that?
I think there's something to the idea that the more durable tariffs here are going to be the sectoral-based ones, but the idea that we might get rid of a kind of blanket global import tariffs that were effectively put on through IEEPA, I wouldn't abandon that view yet. I mean, the problem is that there are multiple paths the administration can get to sort of stitch together to get back there, right? I think some of the guests earlier have already talked about that. And that can be through multiple Section 301 studies. It could be a court injunction. It could be through some of the temporary tariff authorities. So I think, yes, there's something to the idea that the more durable tariffs are going to be those product-specific ones. But the tariff levels that we had yesterday are probably going to be the tariff levels that we have tomorrow, because there are so many different authorities that the administration can reach into to put it back together.
So what does this actually do, tangibly? Does it change negotiations?
I don't think it does, because, again, that authority to raise and escalate, it might be a little bit sort of slower moving, but it's still there, right? And these negotiations are always going to take a considerable amount of time, in our view, right? Take the Japan example. That, in theory, should move pretty quickly. There aren't a lot of existential disagreements between the U.S. and Japan, but one of them is actually on product-specific tariffs around automobiles. That authority is there. That really hasn't changed. That's probably pretty durable. I can't tell you exactly how that's going to be worked out, but because that was already going to take a bunch of time, within that time, the U.S. can stitch together that authority on the other tariffs that went away, so all the same leverage is effectively there during the negotiation.
But do any of the trading partners have more leverage now, given the fact that the White House is fighting with its own court?
I think could argue that they would, but again, I think you'd have to ask the White House their perspective. But my guess is that they probably feel like they have a lot of options and might not be receptive to the idea that they've lost leverage in this situation.
We have seen a bounce, a bit of a bounce, although it's coming back, as John was mentioning, in equity markets. We haven't seen that much of a bounce in the dollar. You could see euro dollar basically flat, DXY up just marginally. How important is that to you as sort of a gauge of how this is viewed internationally?
Yeah, I mean, I think it's important. I mean, so weaker dollar on higher tariffs and kind of weaker dollar on a variety of policy choices that I think are telling overseas investors that there's perhaps a difference in how they're going to be viewed by this administration. So, for example, inside of the House Republican version of the tax bill, the Section 899 provision, it all sort of sends a signal to overseas investors that the dollar might be more volatile than it used to be. It's on a weakening path, partly because the growth differential between the U.S. and places like Europe is going to be a bit higher / weaker over the next 1 to 2 years. So it all fits into the same narrative of dollar weakness. And I guess if we were to have seen this court case largely undo all of these tariffs in a kind of reliable or semi-permanent way, or really reduce the probability that there would be durable tariffs coming from the U.S. to the rest of the world, maybe that would be different. But that's not the signal that I think you take from the events of the last 24 hours.
There are two things that are going on. The dollar is basically flat or not necessarily gaining all that much. You're also seeing yields higher, possibly on the prospect of faster growth, possibly on the fact that you're not going to get the revenue, as Libby Cantrill was talking about, from the tariffs to bolster some of the deficit spending or the deficit that's being incurred by the bill currently that passed Congress. How much are you factoring that in? How much is that a relevant argument to you?
Yeah, I mean, it's unclear, and I don't want to project too much from just a few hours of market reaction, but all those things are possible or plausible. Probably the most likely reaction is that tariffs lower should equal growth higher, should therefore be reflected in higher yields generically. But yeah, there's an element of questioning whether or not the revenue is going to be there. There's an element of questioning what this says about kind of U.S. institutional security in general. But I'd be hesitant to sort of say it's one of those things specifically. It's probably a kind of stew of various different things.
If you're sitting in Congress, if you're a senator and you're looking at this bill and you're questioning the revenue, does it give you any pause about pushing forward on the one big beautiful bill?
Probably not. I mean, the tariff revenue sort of always existed outside of the congressional deliberation. And so when we put together our deficit projections, always include that revenue. But it's a question as to whether or not members of the House of Representatives and the Senate who are really concerned about deficits were willing to at least kind of mentally account for this revenue as a deficit offset when they're kind of selling the broader bill. I think effectively we know kind of who's in that camp and who's not based on what happened in the House, which is to say most deficit hawks were comfortable with the package as it was, so the tariff revenue thing must have de facto been fine for them. This to me doesn't really change anything because, again, you've got the same authority that can be stitched back together probably very quickly to get you to whatever revenue levels you were assuming, get you back to those levels pretty quickly.
How aware are members of Congress of the conversation taking place on Wall Street? Bob Michael of JPMorgan Asset Management was sat in your seat in the last hour, and he said he didn't really want to touch the long end of the curve. He was going to leave that for someone else. He thinks some bad things might happen. How aware are they of what's being discussed up here in New York?
Yeah, I mean, I think it probably varies member by member, but there is, let's say, the sort of policy line being argued by Republicans and certainly by the White House is that the bond market will eventually sort of understand that these are policies that will boost growth and get deficit as a percentage of GDP levels down. Now, so if you're willing to sort of take that line, then you might not be terribly concerned by some of the moves going on in the market. Obviously, we think in our projection is that deficits as a percentage of GDP next year will go higher. And so we wouldn't expect the market to sort of have the reaction the White House is expecting. But again, we're sort of in this zone right now where you can argue and debate about what will actually happen, and that's sort of a problem for the future, if you will.
Well, it's great to get your views, anyway, to bring some clarity to all of this. Michael Zezas there of Morgan Stanley. And fixed income this morning, yields are just a little bit higher on a 10-year by 2 basis points, back through 450, presumably because a lot of people believe that the ruling overnight unlocks a better outlook for the economy, perhaps.
You've got the fewest number of rate cuts being priced in for the rest of the year going back to early in February, because right now people are not seeing that weakness that is likely to come, the suppression to growth that would have come from some of these tariffs.
Futures positive too, but fading, up by 0.84% on the S&P 500. Up next, Anastasia Amoroso of iCapital, Bloomberg's Ed Ludlow, fresh off his interview with Jensen Huang of NVIDIA. We'll catch up with Nela Richardson of ADP and the senior Trump trade advisor, Peter Navarro. All of that and more in the next hour of Bloomberg Surveillance.
Is still where it's at, and I know that right here is the best place to do that.
We think there are some very macro strong tailwinds ahead of us.
Corporate America is healthy, and it's called a business cycle for a reason.
There's just been some uncertainty in the market. You can't argue that.
It's probably a bumpy road ahead. It will come with some volatility.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
A court ruling potentially disrupting the president's trade agenda overnight. I can tell you so far this morning, in the first 2 hours of this program, we have had a lot of pushback from a lot of people pouring freezing cold water over that take. Equity futures, the gains are half of what they were overnight. We're up by 0.8% on the S&P. On the Nasdaq, we're up by 1.3.
The belief right now is curtails maybe for the next couple of days some of the tariffs. And I just should stress some of the tariffs that were initially executed under IEEPA, right? But there's this question of, OK, what else can he do? I will say there is a broader takeaway that the worst case scenario has been taken off the table. But that reality has already been priced into a lot of equity markets. And you've seen that play out over the past couple of weeks.
It certainly slows things down. But there are other tools and options for the president to pursue. Ultimately, I do think it complicates negotiations over the next several weeks, though. How seriously can trade partners take some of these threats?
Well, I think Kellyanne Shaw, who was a trade negotiator in Trump 1.0, put it really well. It's sand in the gear, slows things down. It puts things on pause. It's detour. But the final journey is there. The destination of higher tariffs is there. But now the administration needs to figure out whether or not they're going to win this stay to keep the IEEPA tariff levels, or they're going to have to go down another path, 122. And then what kind of leverage do they end up giving away to some of their trading partners as they are in the midst of these negotiations and that self-imposed deadline, basically, of July 9th to try to get all these deals done?
What's the first question for Peter Navarro later this hour? He's catching up with us at 8:45 Eastern Time. What's the number one question right now?
Well, in this ruling, it basically says you would have had better sound legal authority to use Section 122 of the Trade Act of 1974. Why didn't you do that in the first place?
Number one question for Peter Navarro, 40 minutes away. Elsewhere, looking at Nvidia this morning, that stock is doing nicely in the pre-market. And Lisa, without this name, up 5.5%. I wonder where the equity market would be right now.
Especially because this is part and parcel of the larger discussion about just how decoupled this world, particularly U.S. and China, can actually be. I find it fascinating that the reason why people are so excited about NVIDIA is because they took an $8 billion charge for their China business. But even though it's an existential risk, people are talking about the likelihood that they will be able to sell into China, that they will be able to continue with that market, given the fact that it's instrumental to the dominance in the AI world. Again, there is a belief that a lot of these policies are temporary, at least in the part of corporate America. Wait 3.5 years and then keep on keeping on.
There's going to be some pushback down in Washington, D.C., not just from Republicans, but from Democrats as well. The Wall Street Journal reporting a letter was sent to Jensen Huang from a Republican, Senator Jim Banks, and from a Democrat, a well-known Democrat in these parts of the world on Wall Street, Elizabeth Warren.
Well, they're concerned that this is just too cozy when it comes to China. Obviously, Jensen Huang wants to get that market share. To Dan Ives' point, and what Jensen Huang was saying to Ed and reiterated to me a few weeks ago in Washington, China is not behind. They're very, very close to the United States, and Huawei is a formidable actor. So if NVIDIA is not there, Huawei would just take that market share. And they're basically saying we are giving up space to Chinese competitors.
The rally on that name supporting this market this morning. Equity futures on the S&P positive by 0.8%, on the Nasdaq up by slightly more. Coming up this hour, we'll catch up with Anastasia Amoroso of iCapital, with stocks gaining on Trump's tariff setback. The senior White House trade advisor Peter Navarro will be joining us with the administration's response, and Nela Richardson of ADP with another read on the US labor market. We begin this hour with our top story: the president's tariff strategy stuck in legal limbo. Joining us now is Bloomberg's Tyler Kendall. Tyler, have we heard from the president yet? What is the response from the White House?
Yeah. Hey, John. So we are watching closely, waiting to see when President Trump is going to weigh in on this latest ruling. But we did hear from the White House that they are going to appeal it, which means that it could ultimately take time to make its way through the legal system. And the spokesperson telling us at Bloomberg News that ultimately they do think that using IEEPA that the framework that they use to invoke IEEPA does amount to a national emergency, which is short of the underlying issue here when it comes to this ruling. The court said that the administration's view that persistent trade imbalances don't amount to an unusual and extraordinary threat in order to invoke the International Emergency Economic Powers Act. Now, moving forward here, there's still a lot of big questions, including how long will this end up taking ultimately to go into place, and what this means going forward to how the Trump administration uses tariff policies. I can say that I actually just spoke to one legal expert who pointed me to one key line in this ruling, which is that ultimately, the president has never invoked IEEPA to put into place tariffs yet. And this court said that it would be unconstitutional for Congress to give what they called unbound tariff powers. That's an interesting line there, because historically, legal precedent has shown us that the president often has pretty broad authority when it comes to both invoking tariffs and also declaring national emergencies.
Tyler, let's go through the menu of options. What do you think the president, the first lever he'll be most likely to pull?
Well, we're still expecting Section 232 tariffs to go into place on the basis of national security concerns. So we're going to be looking out for that when it comes to those sector-specific critical sectors like pharmaceuticals and as well as chips that we're still waiting for there. Then something that's been getting a lot of focus on is Section 122. This could allow the president to put tariffs in place at a 15% ceiling for 150 days, but it would require him to essentially declare a balance of payments crisis. And that's something that we're not sure yet if the White House is ultimately willing to do. And then the last one that we're watching closely is whether or not any further investigations are instituted under Section 301. That would be looking into unfair trade practices and could be deemed a more durable solution when it comes to tariffs.
Tyler Kendall with the latest in Washington. Tyler, thank you. Not expecting a freak out from the White House given the amount of options that they have on the table at the moment. We've just heard from Kevin Hassett, the director of the National Economic Council, close economic advisor to the president, saying the administration has different options on tariffs and ultimately Annmarie expects an appeal to happen and a win on appeal.
So that's the thing. They might not have to move to 122, that section to use to continue these tariffs, because with their appeal, they also asked for a stay of the current levels. Basically, please keep policy in place while this goes to the courts. And then it goes to the Supreme Court. And you have to think, a lot of people, Terry Haynes at Pangea Policy, messaging me all morning saying, do you think the Supreme Court is not going to side with the administration on this? So the administration might just, if they get a stay, just let this play out in the courts and continue the negotiations in parallel with trading partners.
The bounce and the gains in equity still fading. We're higher by 0.7% on the S&P. Here's the view on Wall Street this morning. Anastasia Amoroso of iCapital writing, markets showcase positive momentum and a series of remarkable reversals. We think it can continue into June and maybe beyond. Anastasia joins us now for more. The maybe beyond is mine, of course. Anastasia, good morning.
Good morning, John.
Do you think the pain trade is still higher? The path of least resistance here for equities is up and to the right.
I do. Obviously, tariff block is reinforcing some of the positive momentum that we've had, and we can talk about that. NVIDIA is also doing that. But I would say there's a number of other factors, and that is the fact that the U.S. economy is really persevering through everything that has been thrown at it. And if you look at the second quarter, which was supposed to be the quarter where we feel these adverse impacts of tariffs, that is not at all what happened. Instead, we front-loaded our purchases. Instead, we've actually seen an uptick in manufacturing. We've seen a sharp reversal in consumer confidence. And so all of that is now leaves us tracking 2.3% GDP growth in the second quarter. How bad is that for the U.S. economy? That's pretty great. It's pretty great for markets. And that's why I talked about this series of remarkable reversals. It's back to the U.S. It's back to the U.S. tech. And it's also back to cyclicals. And so, I think the counter argument to that, but what about inflation? And what about, what could still happen? But I think there's a strong counterforce to inflation, which is lower oil prices. They're down 15% from the levels that we saw in January. And also, by the way, lower wages. Wage growth is decelerating to 4.4%. So I think that's a really strong offset from whatever impact we may still see on goods prices. All of that supports markets.
Crude down, consumer confidence up. You said it. And I think you've nailed it. The soft data is starting to bounce. I wonder if that continues on Friday when we get you, Mitch. Do you see reason? Are you confident that maybe the soft data could actually catch up to the hard data and the hard data not catch down to the soft data?
That is exactly, John, what the chart is showing. And, that was the question a few weeks ago. Will the hard data fall apart and catch down? And that is not at all what happened. You've actually seen already a sharp reversal higher in the soft data. And I suspect that could be the case because, first of all, we have a series of delays. Most likely there's a determination to cut the deals with the trade partners. Maybe we do actually get a complete roadblock to those tariffs, not my base case. But the point is that I do think the tariff rates that were imposed or threatened, I should say, in April is not at all where we end up. So for that reason, I think the soft data will continue to improve.
Has this market gotten fully numb yet to all of the headlines on trade? In this idea that, you can't take anything too seriously, you can't make any moves that are too big. So you've seen it kind of get ratcheted back. But are we at a point where it's just sort of noise?
We've gotten, I would say, to a level of comfort with a certain level of tariffs. And Lisa, I know you questioned earlier this morning, why is the market not higher given this seemingly positive roadblock that we now have to tariffs? But I think the reason for that is the markets are aware that there is a budget deficit problem. And there's something like $4.5 trillion, which would be a gap that's left in the budget deficit due to the tax deal that's being passed through Congress right now. How do you plug that gap? Well, you raise the tariff revenue, and let's say it's $200 or $300 billion of tariff revenues that could be raised given the current level of tariffs. That is significant, actually, in order to plug in that annual hole that would be a result of the tax deal. So I think that's why the markets may have gotten comfortable with the fact that some level of raising revenue through tariffs is actually a good thing for the U.S.
I'm wondering how concerning it is to you that you could end up with both tariffs that could on the margins be slightly inflationary, a resilient economy that could absorb some of those price increases, and yields that can't come down given the deficits, given the inflation, and given the rhetoric that we're hearing from Fed officials.
Right, but I think it depends on what yields. I think the yield curve really steepening out, that may be the trend that's here to stay, because that's right. That's what keeps the back end elevated, is the concern about the budget deficit and the term premium, and that's probably not going away anytime soon. But if you think about the front end of the curve, and if you think about the inflation print that we're about to have, we're looking for 2.5% core PC inflation, 2.2% headline. So that actually does warrant the front end interest rates to be probably lower than what they are today if you don't want to have the real interest rates in too much of a restrictive territory. So I see that scope for the front end of the curve to actually keep coming down.
When you look at what's going on in policy-wise, the deficit hawks in Congress, do you have concerns about that this can actually be very negative, the tax bill that's working its way through Congress?
I mean, yes and no, and tariff revenue is actually a big part of that. So if you think about the CBO scoring of how much this would impact the budget deficit, it doesn't take into account any of the tariff revenue. It just purely takes into account the revenue that would not be raised if the tax cuts are extended. But if you couple that with some of the cost-cutting efforts, which maybe have not materialized to the extent that the markets have hoped, and if you especially couple that with the tariff revenue, then we might be in a neutral situation versus the stark projection from the CBO for the budget deficit.
What kind of income do you expect from the tariff revenue when we could wake up to rulings like the one we woke up to overnight?
Right. Well, that is today's news and that is today's ruling, but I don't expect that that will be the case. And, I mentioned that my base case is not that the tariff revenue goes away. I think the Trump administration is likely targeting that 10% universal tariff as a revenue raiser with some sort of a highest sectoral tariff. And you've been discussing this so well this morning. There's so many other levers that can be pulled, and there's so many other sections of the law that can be applied. And look, I remember writing the outlook for this year, and the base case was always that there's going to be legal challenges. And it's not just the base case for anybody in the market. I am sure, obviously, it's been the base case for the administration as well. So I think that's why the appeals decision was filed as quickly as it has been.
You're unique because something in your outlook is still relevant to where we are right now, because this world is very different to the world a lot of people expected.
Well, we called it the year of wild cards. So I think I think we got it.
It's been wild so far. Anastasia, it's good to see you. Thanks for dropping by. Anastasia Amoroso there of iCapital on this equity market and more. The equity market at the moment, by the way, still failing on the S&P, positive by just about 0.8%. With an update on stories elsewhere, with your Bloomberg brief, let's cross over to Danny Berger for more. Hey, Danny.
Hey, John. The U.S. will start revoking visas for Chinese students with connections to the Chinese Communist Party or studying in critical fields. The move in escalation of Washington's push for more scrutiny of foreigners attending American universities. The Trump administration will also revise the visa criteria for applicants from China and Hong Kong. Elsewhere, Paramount has offered $15 million to settle CBS's lawsuit with President Trump. The Wall Street Journal reporting that Team Trump wants more than $25 million and is also seeking an apology from CBS News. Trump's lawsuit against the network alleged it deceitfully edited a 60 Minutes interview with Democratic presidential candidate Kamala Harris to make her sound better. And Pimco President Christian Strack ringing the alarm on sub-investment grade borrowers.
Rates are much higher than people had expected today and will be much higher than people had expected over the course of this year. And so the weight of those interest costs is pretty serious on what are already pretty levered companies in the context of an uncertain economic outlook.
Pimco has been one of the loudest voices voicing concern over private credit in recent years. And that's your brief, John.
Danny, thank you. More from Danny later this hour. Up next on the programme, the morning calls, plus Bloomberg's Ed Ludlow on NVIDIA and his interview with the CEO, Jensen Huang. That's next. This is Bloomberg. The opening bout 1 hour and about 12 minutes away. Equity futures still positive by 0.7%, but the gains are fading so far. On the Nasdaq 100, higher by 1.2%. That's the price action. Here are your morning calls with just one stock in focus, Nvidia. First up, JPMorgan maintaining its overweight rating, citing solid results despite a multi-billion-dollar revenue hit on China export restrictions. Your second call from Morgan Stanley, raising its price target to 170, saying the bear case for the stock is fading as the chip giant shows acceleration despite headwinds in China. And finally, Citi lifting its price target to 180, noting continued and robust AI demand. That stock is up by more than 5%. And the CEO, Jensen Huang, is saying AI demand is off the charts following an upbeat forecast, but expressing concerns about competition in China.
The Chinese competitors have evolved and advanced greatly over the last year. One of the challenges of the changing regulations is the ability for markets to trust the NVIDIA and ultimately American platforms. It's prudent, I think, for the Chinese customers to make sure that they develop their stack on Huawei, and because it's hard to rely on American technology at this point.
Joining us now to discuss is Bloomberg's Ed Ludlow. Ed, fantastic job. We've got a bit of time to work through this conversation with you. We wanted to pick up on that point, though. The way he discusses China and competition, and I wonder if that's a message not for investors, but for Washington, D.C. and the White House.
Yeah, it's a message for President Trump, and that's the CEO of America's most important company saying that if you are a Chinese AI company, Tencent, Baidu, Alibaba, use Huawei, because essentially the net conclusion of the conversation yesterday is that the door is now closed based on current policy. And Jensen Huang danced and balanced this fine line between basically supporting the president's onshoring and sort of development of the American AI stack policies with a very clear message that export controls as they currently exist are not just damaging to NVIDIA and American companies, but the net result is that there was a vacuum that was created, and China now has a national champion that is moving very quickly and has actually matched NVIDIA technologically on some level.
Ed, fine line is the right phrase, I think. When you spoke to him, did you sense any tension between ultimately what he would like to do in China and how the president views things currently, and how this plays out in the months and years to come?
Yeah, Jensen Huang's been actually quite consistent with a basic argument, which is big picture AI, half of all of the development is happening in China, or it's being done by Chinese researchers. It has always been the absolute critical market for consumer electronics, but in more recent times, it has also been the critical end market for data center. They give a total addressable market figure of $50 billion, or in other words, what they told us was the loss of opportunity is a $50 billion loss of opportunity without giving any kind of time frame. And so that was a very clear signal that what you're doing is stopping us accessing that most important market. But it is actually one of those funny stories where you need to look at the literal guide, the outlook for the fiscal second quarter, because they told us a number that met estimates, but also that they had left $8 billion on the table from China, which indicates that actually what he's saying is true. AI demand is so robust that they can make up the shortfall from somewhere else.
But Ed, at the same time, he also laid it on pretty thick on how much he thinks the president's plan is working when it comes to tariffs. And part of that has to do with what's going on with China. He called the president's plan to reindustrialize the United States, quote, utterly visionary. What message is he sending?
Late, right?
What message is he actually sending?
You and I are up pretty late talking about this. The timing was pretty astonishing, right? He literally said that the president's tariff policy is visionary, and then you can bring the reporting on the rest. But the International Court ruled just a few moments later that Trump's tariff policies were illegal or unenforceable. This is what I meant when I was talking with John about this fine line. You know, NVIDIA has bought into the sort of onshoring of supply chain. They're committed to doing that. They see value in doing it. But at the end of the day, there are buyers of NVIDIA's technology elsewhere around the world. Think about where Europe fits into this. Next week, Jensen Huang will get on an aeroplane and he will go to the UK, France, and Germany and try and convince those governments to spend a lot of money on building data center capacity. But the chips will also be built using ASML, high-NA, extreme ultraviolet lithography machines. They're manufactured all over the world, but principally final assembly is in the Netherlands. Are they subject to tariffs? Like, this is a complicated thing, and NVIDIA is still stung at different points of the movement of technology across borders.
Ed, when it comes to potentially still getting market share in China, given the fact that they can no longer sell the H20 chips, are they going to be selling any chips into Beijing?
So the official answer, which was stated on the earnings call and in the interview, is that they have nothing to announce. But I think the indication from Jensen Huang is that they will have to design a lower level chip from the ground up. Basically, you know, when we spoke for all these past couple of years about H100, H200, Hopper class, they engineered that chip to its lowest absolute spec performance. It couldn't get any less performant. But that's done. It's closed. The American government won't let them sell it, so they have to come up with a new chip. There was an interesting piece of news that came out of the conversation, which was we've been so obsessed with H20, but Jensen Huang actually told me that Huawei already has GPUs and accelerators that are as capable as the H200, which until very recently was NVIDIA's most powerful chip. So that's the other signal to the administration, like, you are penalizing us on our lowest spec chip when Huawei is already competing on our much better technology or latest technology.
Just before you go, doesn't DeepSeek feel like a lifetime ago?
It does a little bit, although the story about it was a sort of marginal technology update to the latest model that we published on the Bloomberg yesterday, had astonishing readership. And so I think we still track the arc and progress of China's domestic champions, both on the hardware side, Huawei, but on the software side and the model side too, DeepSeek. And clearly our readers are paying close attention as well.
A lot has happened since then, that's for sure. Ed, fantastic work, sir. Wonderful. As always, Ed Ludlow of Bloomberg, sitting down with Jensen Huang, the NVIDIA CEO, just yesterday, following those earnings. That stock up nicely in the pre-market, which is lending to some gains on the equity market more broadly. On the S&P 500, positive here by about 0.7%. NVIDIA's higher by more than 5%. Coming up on the programme, we'll get a double dose of economic data. We'll get US jobless claims for a read on the labour market, another read on GDP as well. We'll speak to Nela Richardson of ADP here to react, and Peter Navarro of the White House, a close economic advisor to the president, trade advisor to the president of the United States, joining us 15 minutes after that. So in about 20 minutes from now, we've got to talk to him about the options on the table for the president, the options he might pursue, and whether the ruling overnight disrupts things in any way, shape or form as they continue to engage trade partners and negotiate on the way forward with that self-imposed reciprocal tariff deadline of July 9th looming. Live from New York, the data up next, the trade conversation just around the corner. In just a few moments, about 20 seconds away, we'll get another read on GDP and a read on the labour market as well. Jobless claims just around the corner. Going into it, your scores look like this. Here's the price action. Equity futures positive by 0.8% on the S&P. On the Nasdaq 100, higher by 1.3. In the bond market, yields higher across the curve by only a basis point or two now. The 10-year up by a single basis point to 4.49. With your economic data, let's cross over to Bloomberg's Mike McKee. Good morning, Mike.
Good morning, John. Well, we're just waiting for the data to drop, and of course, everybody is looking for that. We do see a little bit of improvement in GDP. It fell by 0.2% in the first quarter. That's a little bit better than the 0.3 that had been forecast. However, consumer spending much weaker. It was only up 1.2%, was 1.8% in the initial release of all this. I'll have to look at the data to see exactly what other categories moved, but I assume we did see a little inventory build, which was the problem the first time. But the number the Fed cares about and Wall Street cares about is 240,000. That's initial jobless claims last week, a significant rise from 227 the week before. And it does suggest something to keep an eye on, but not necessarily to panic about. And the reason is this is a time of year when seasonal adjustments have, in the past 3 or 4 years coming out of the pandemic, pushed claims higher than they otherwise would be in this period. So it's something to watch, but it isn't yet necessarily a sign that things are going to go all badly. Continuing claims, 1,919,000. That is also up from 1,903,000. It does suggest there, of course, that it is not easier to get a job these days. Companies are not hiring, but it doesn't look like they're firing a whole lot of people either. In the context of all this, 240,000 isn't very big.
Mike McKee, stay close. I just want to go through these numbers and talk about the market move off the back of them. Not a major market move, but the colour of the bond prices did flip from red to green. So yields were up and now they're just slightly lower. That read on claims here, Lisa, both initial and continuing claims, will get people's attention.
Particularly continuing claims because it's coming in at the highest level going back to 2021. So even though, to Mike's point, it's not that there are companies that are necessarily wholesale firing, but hiring not so much. So people who are out of a job are having a harder time waiting for longer periods of time before getting reemployed. And that has to give a little concern to people who are looking for clues that the labor market could weaken.
Mike McKee, just to bring you back in just quickly, you touched on it. That 240. The estimate was 230. The previous number was 226, the revised 226. How much weight should we put on that number?
I wouldn't put a whole lot on it yet for a couple of reasons. One, the number is just 1 week. We've seen a lot of volatility in jobless claims recently, two, the seasonal factors, and then three, the Fed has said basically, or at least Fed officials have told me that they'd need to see it get close to 300,000 before they would start to worry at all about what's going on. Remember, we're about to go into the summer when a lot of manufacturing plants, especially in the auto industry, shut down for retooling, and that adds to the jobless claims. So it'll be a little hard to separate signal from noise in the claims numbers unless we get a really big move.
Mike McKee, thank you, sir. Appreciate the update. Nela Richardson of ADP is with us around the table, the perfect guest to talk about this labour market. Nela, good morning to you.
Good morning.
How much weight should we put on that 240? 240, if you take a historical chart, you know this better than most. 240 still pretty low for jobless claims.
Right. So over the 50 years that this number has been recorded, the average has been about 360,000. And so where we really see weakness in the economy, those claims push up above 400,000. So when Mike McKee said that the Fed is looking at something over 300 to get excited about, that's consistent with the historical patterns. But sometimes, Jonathan, it's not just about the level, it's the speed of increase. So we saw this pop up. If we continue to see an increase at a faster rate, that might get attention, not just the level, which is still relatively low.
How much attention does continuing claims get, given the fact that it seems like people are having a harder time getting hired again?
To me, that's the number to watch. The fact that it is taking longer to get jobs. And the New York Fed came out with a recent study that showed that college grads' unemployment rates have drifted higher. So college grads between 22 and 27 in age is drifting higher, and even compared with the difference with young workers who may or may not be college grads, that is narrowing. So they're both edging higher. And I think that's a good read on how employers are thinking about the labor market. They may be foregoing those entry-level positions, whether college graduated or not, in order to hold the line on hiring and keep their existing workforce, but not add to it, and certainly not add a headcount that requires training and onboarding and mentoring to be productive.
How much is that an economic read, and how much is that a technological read, given the fact that some of those entry-level jobs can be filled with ChatGPT?
Yeah, I don't think we're to the point where ChatGPT can do everything that a college graduate can. They can't get coffee for it. No, I'm just kidding.
The important stuff.
Kinda.
But I think we're increasingly going to have this push and pull with demographics and technology. And you're going to see that in a really widespread way. Technology should help make people more efficient, which means that could slow down some hiring. Or it could open up hiring if there's a business opportunity that's profitable because of that efficiency. So we're not going to be able to settle that in the jobless claims numbers today, but to acknowledge that, to your point, your original point, it is taking harder to find that job.
You talk about in this note the median age of workers has ticked higher in the United States. It doesn't feel like a lot, 4.3 years to 42.4. But you say it's a big change and going to have a big effect. Why is that such a big change?
10,000 people in the United States are reaching retirement age every single day. And so what's that going to do? It's going to slow the rate of increase of potential employees. So to put numbers on that, the BLS estimates that over the last decade, the employment of the U.S. grew by 1.3%. Going forward the next decade, it's going to do a fraction of that, 0.4%. In fact, the CBO came out recently and said if it wasn't for immigration, the U.S. population would decline over the next several years. So we're in this position where we need that young workforce, but if the young workforce isn't getting an entry because of an uncertain economy, they're going to be at a behind the ball, so to speak, in terms of supporting this aging demographic. So it's something to be concerned about.
But when it comes to this aging demographic, at the same time, we do have slower immigration right now. How do you think about how the policy is affecting where we are right now?
Right. I think that the policy will play out in prices, right? So if there's not the workers and if there's persistent labor shortages in key areas, I'll name a few. One is any kind of social assistance or health care to help support that aging demographic. If that is an open spot in terms of where, first of all, where college grads may not be going into those fields, and also where immigrants have supported an aging demographic historically, then that's where you're going to see wage increases and persistent shortages, which may trickle over into inflation. So the thing about the economy is all these things are related, but they're hard to predict. And so that's why I think Main Street is in a wait and watch moment here.
Let's just sit on that negative supply shock just for one extra beat. Stephanie Roth of Wolf Research was in your seat earlier this week, and she was making the case that we need to prepare for softer jobs figures, which don't necessarily mean weakness. She was saying something around 100K would still be pretty decent for the economy that you're speaking to, and that we wouldn't see unemployment climbing. In fact, maybe unemployment might even go down. Does that speak to the kind of things you're thinking about?
Yeah, when everything's moving, it's hard to just place all your bets on a number, whether it's the unemployment rate or the number of jobs created in a month, because you don't know whether it's a supply-driven factor or a demand-driven factor, or people being removed from the labor market or leaving the labor market, or are companies reducing their demand. And I think we're at this moment where a lot of things are changing, and so it's somewhat uncertain. But if you saw 100,000, I don't think it would be a big shock to you, given the level of uncertainty. If you saw a persistence of 100,000 or lower over the next 3 months, I think that would be consistent of an economy that was slowing down.
The estimate for next Friday, 130 for ADP, if you're interested. 118, Nela Richardson of ADP. Nela,
Interesting.
thank you.
Thanks for giving me that.
Just a handful of economists putting those estimates together right now. Lisa, looking at these numbers, Guy Lebard of Jenny Montgomery Scott said jobless claims rise to 240, levels not seen since 4 weeks ago.
Yeah,
but it's not just about levels, as Nela said, it's about speed and the change.
That said, this isn't going to get anybody particularly worried, particularly the Federal Reserve, based on the fact that this seasonally is a time where you do see some sort of increase in jobless claims. The initial jobless claims, though, the ongoing, continuing claims is something to watch, given the fact that it's taking longer for people to get jobs. The rigidity, the brittleness of this labor market is something a lot of people are keeping their eyes on.
The low churn dynamic that so many people have described in this labour market. Let's give you an update on stories elsewhere this morning with your Bloomberg brief. Here's Danny Berger. Hey, Danny.
Hey, John. The Trump administration is moving to restrict the sale of chip design software to China. Sources telling us that the Commerce Department sent letters to some of the leading providers of electronic design automation last Friday, telling them halt shipments to Chinese customers. Elsewhere, Elon Musk's time as a formal advisor to President Donald Trump has come to an end. Musk posted on X, "As my scheduled time as a special government employee comes to an end, I would like to thank President Trump for the opportunity to reduce wasteful spending." By law, Musk's status as a temporary government official was set to run out as soon as tomorrow. And Oklahoma City is advancing to the NBA Finals for the first time since 2012. The Thunder dominated the Minnesota Timberwolves, opening Game 5 with an 11-3 run and finishing with a decisive 124-94 victory. OKC now awaits the winner of the Eastern Conference Finals, where the Indiana Pacers lead the New York Knicks 3-1 in the series. And that's your brief, John.
Nela's smiling. We've got Indiana in the house this morning, I think. Yeah. I'm not sure what AMH thinks about that, holding on to a Knicks mug at the moment.
Come on, gotta believe.
You can address that in a commercial break. Up next on the programme, the administration's response to a court challenging President Trump's Liberation Day tariffs. We'll catch up with senior White House trade advisor Peter Navarro. Dr. Navarro joins us next. The opening bow is 46 minutes away. Equity futures fading. We're positive by 0.7% on the S&P 500. Still up nicely on the Nasdaq 100, up by 1.2. That's some of the price action as we count you down to the opening bell. Here's the trading diary through today and into next week. Fed speak from Barkin, Goolsby, Kugler and more. Tomorrow, PCE, personal income and spending, together with you, Mitch, consumer sentiment. Looking ahead to next week, ISM manufacturing on Monday, on Tuesday, durable goods and jolts on Wednesday, ADP employment data, and on Friday, next week tomorrow, the big one, the payrolls report, just around the corner. Before we get into all of that and more, let's get you some morning movies this morning with Danny Berger. Hey, Danny.
Hey, John. We heard from HP yesterday, and you can see exactly how the market reacted to those earnings. Down just under 9%, a huge hit from tariffs, basically saying that, look, most of our production comes from China, so the pain is there. They're going to try to move some away from China. But at the same time, they talked about consumers less willing to buy computers because of the tariff uncertainty. Now, this morning, we also got Best Buy earnings, a similar type of story. Margins coming under pressure. They cut their profit and sales outlook for the year. China is their number one supplier for the goods that they import. But to be clear, this is also a Best Buy specific story. Sales have been falling for them for the past 3 years. So those shares down more than 2.5%. To the upside, Elf Beauty up some 15%, announcing that they would be buying Hailey Bieber's brand of Rhode, that cosmetic company. Jeffrey saying it's an attractive deal for them. That $1 billion price tag also looking good. They also reported earnings. Didn't give an outlook, but apparently it doesn't matter if you're buying a celebrity makeup brand. John.
Danny, unreal pricing. How many billion-dollar celebrity makeup brands are there right now?
Too many. Honestly, they're the ones that are getting traction because ultimately this is an influencer world. If you don't have that, it's really tough to gain traction.
And to be fair, some of them are very good. Fenty lip gloss, it's the best.
That's Rihanna, right?
Yes.
Okay. Good, I'm up to speed on that. Let's get back to our top story. This morning, the White House vowing to appeal after a federal court ruled against President Donald Trump's Liberation Day tariffs. Joining us now to discuss, the senior White House trade advisor, Peter Navarro. Dr. Navarro, welcome back to the program, sir. First of all, I think we've got to get into the ruling overnight. Have you spoken to the president? And ultimately, what's his reaction to what we heard?
Haven't spoken to the president yet, but I've spoken to the people who have spoken to the president. Look, we're in a situation now, big picture here is IEPA. We were using the International Emergency Economic Powers Act. There's no question that there's an economic emergency with respect to both uses that we had. One is we are in a world where China has killed over 1 million Americans with fentanyl poison. And we took this step to stop that. We will continue to press on that. At the same time, we invoked that rule to stop what has been 20 million illegal aliens streaming into our country, driving down wages, taking jobs away. That's an economic emergency. And on top of that, the world continues to steal about $1 trillion a year as measured by the trade deficit. And that's an economic emergency because it's transferring our wealth abroad. So we think we have a strong case. Yes, we will immediately appeal and try to stay the ruling. But at the same time, the court, interestingly enough, basically said we were right, just use different rules and laws. So nothing has really changed here in that sense. We're still, as we speak, having countries call us and tell us they want a deal. So these deals are going to happen. So that's kind of where we're at. And it's troublesome here because if you look broadly at the pattern, we've got courts in this country who are basically engaged in attacks on the American people. The president ran on stopping the fentanyl poisoning, stopping international trade unfair practices from stealing our factories and jobs. And courts keep getting in the way of that. The courts get in the way of our trying to deal with the border issues. Now they're getting in the way of our trying to deal with the fentanyl crisis. And that's where we stand here. And I think part of what's going to be important about this ruling demonstrates yet again to the American people that the judiciary in this country has been weaponized in ways which are contrary to their interests.
Well, Peter, you would have heard a lot of people come on this program and ultimately say you still have tons of options. And you alluded to one of them. You will, of course, appeal. But could you describe what you might do in the interim, the way you might pursue your ultimate objective anyway, with the tools you have still available to you?
I'm going to let Jamison Greer, the USTR, inform you on that, and you'll be hearing from him soon on that. But I mean, look, any trade lawyer knows there's just a number of different options we can take. If you look at the kind of things we've already done, it kind of give you a roadmap on that. There's all sorts of numbers out there. There's 122, there's 301, there's 232, there's 338. There's all sorts of things we can do well within the law. But look, we think that what we've done already is perfectly appropriate. So that's why the appeal will take case. But, you know, it's like, interestingly enough, I was scheduled to come on the program today to talk about the bond market and the big, beautiful tax bill. But there is a bridge to that. And if I may, we have a situation where the bond market, we've seen like a 50 basis point increase in yields in the 10-year since April 2nd. And a lot of the hysteria around the big, beautiful tax bill centers on the Congressional Budget Office scoring that bill in a way which says there's going to be a $3.7 trillion addition to America's national debt over the next 10 years. And so, of course, you got to finance that, and that drives interest rates up and heads explode. When, in fact, if you do the math properly and you look at the history of the CBO forecast, you actually see about a $5 trillion swing to a $2 trillion surplus from the bill. And I'd like to just walk you through the math there. It's like the CBO, the Congressional Budget Office, historically has been very bad at estimating impacts of tax bills. In the 2017 tax cut that President Trump did, they got that totally wrong. They underestimated the GDP growth by a full percentage point. And what that does, if they make that same mistake here, which they have done, when you add that, that's about $2 trillion of additional revenue because you got greater economic activity. And then,
Peter, you also have the revenue from the tariffs, which I saw your opinion piece in The Hill. I just want to get back to the I just want to get back to the tariffs because you don't have that revenue.
Well, that's another $2 trillion.
If you don't have the legal authority to use it, though.
That gets us.
But can I just ask? You mentioned Ambassador Greer. We're going to hear from him soon. Are we going to hear from USTR about the bridge, potentially what John was talking about? If you can't use IEPA, potentially you're going to come out, the administration say we're going to use 122 in the interim.
Well, the court did in some sense tell us to do that, which was interesting. But look, here's the thing. Fentanyl, people need to wrap their heads around the fact that every day here in America, people die because communist China puts 50-gallon drums full of these chemicals that come over to the Mexican cartels and then are made not just into fentanyl. They use the fentanyl to spike heroin, to spike methamphetamines, to spike ecstasy, and they're even putting it in prescription drugs like Xanax and Valium. And people are dying. It's been over 1 million people, 1 million Americans. And it's an economic emergency because a lot of those people are prime age working force here in America. So this kind of court ruling, the judge, the lead judge. But if the court
said, if the ruling said, Peter, and we've been talking about this, page 34, 35, they say basically you are in your right if you use Section 122. Why didn't you guys do that from the beginning?
Well, Section 122 only gives you 150 days. So there's your answer right there.
So are you, Section 122, if you use this now for 150 days, would it be a bridge to 301 or a bridge to 232? What are you thinking more long term?
You can be the strategist on that, but those are the kinds of thoughts. And look, if anybody thinks this caught the administration by surprise, think again, okay? Because you could see in the oral arguments where those judges were going, and the lead judge in this. I mean, the problem with that court, it's such an obscure court, but it's consistently been globalist, pro-importer, giving us bad rulings. The lead judge there ruled against the 232s originally and had to get overturned by the appeals court. So that gives you an idea of the bias against the president's tariff policy right on that court. But I think the big picture here is we've got a very strong case with IEEPA, but the court basically tells us if we lose that, we just do some other thing. So nothing's really changed. I want to say this to the world. You're cheating us. We're coming after you. Deal, and let's make this right, because ultimately what's at stake here is the global international environment getting in a way where it's fair to America, and thereby, if it's fair to America and we restructure this thing in a way, we'll have just more stability in terms of financial flows and capital and everything like that.
Dr. Navarro,
wildly out of balance now.
We've got to run, but it's great to catch up with you, sir, and we look forward to seeing your next steps. I've just got to tell you one thing.
Anytime, John.
You're not allowed to hire Anne-Marie. She's with us, all right? The senior White House trade advisor, Peter Navarro. Peter, thank you, sir. Dr. Navarro there on the trade story. Coming up tomorrow, we'll catch up with John Stolfus of Oppenheimer, Abby Yoder of JPMorgan, Dana Peterson of the Conference Board, and Lindsay Piegza of Stifel. Lindsay, as those gains continue to fade in this equity market?
A real question now about how much upside there can be. Maybe the trade question hasn't been settled yet. Growth very much front and center.
Live from New York City. Thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.